All right, all right, all right. All right, what's up? Welcome to the Millionaire Challenge. I know it's been a second. All right, let me make sure my volume is on. All right, because last time I had this session, my volume was off. So the volume is on. So welcome to our Millionaire Challenge. What I would like for you guys to do is if you want me to analyze a stock for you, make sure that that stock is at least $1 billion in market cap. All right, in market capitalization. If you don't know what that is, go to Yahoo Finance, type in that stock, look at the market cap. It has to be $1 billion or higher, and I'll analyze that stock for you. So, I'm gonna show you guys how to approach the market in several different ways, and that's what makes me different from any other trader investors that you come in contact with. Right? If I hear, "Hey, I want to buy Apple," well, is this a intraday trade? Is this a swing trade? Or is this something that I'm investing in? Because, there's three different strategies or three different approaches that I want to take, towards Apple. And that's the problem that a lot of traders or investors have, right? Once they decide that they want to buy something, they don't know why they're buying it or how they're going to buy it. So during these sessions, what I like to do is I kind of want to teach you guys how to approach the market like a one percenter. All right, what makes me a one percenter? What gives me the right to be able to educate you guys on the stock market? Well, for one, I've been in the market for over 10 years. All right, I am a expert in stocks, options, futures, and cryptocurrency. I have investment portfolios. I swing trade, I day trade, and I do it all. And I've shown my receipts all the way, for the last, decade. So I have the right to at least be able to show you guys how I've approached the market and some of the successes that I've had. So, the fastest way to making $1 million is not saving $50,000 a year for 20 years. Even saying that, discourages me, right? Dang, I got to save $50,000 a year for 10 years to get to $1 million, right? And everybody knows my story. I lost everything back in the real estate market crash back in 2008, 2009, and that's when I turned to the stock market, and I was able to go from millionaire status to bankruptcy, right? And losing everything and going back to a thousandaire, and then retrieving all of those funds back in the next 10 years in the stock market. And it wasn't saving $50,000 a year for 20 years. The quickest way to making $1 million is this. All right, so I'm not going to disclose, how much I'm actually worth, but me and my family, we are millionaires, right? And there's a process, and there's a way that your mind, it's a way that you're going to have to view the market to get there. And that's why I like doing segments like this called investing as a lifestyle. Now, I already know that I'm going to lose members because of what I'm going to say during this segment. I'm going to lose friends. I'm going to have a couple of haters that are going to come out. But what you guys respect about me is that I'm going to tell you guys how it is. I'm not going to sugarcoat it. I'm going to tell you guys real percentages. And I want you guys to take in that information for what it's worth, right? If you feel offended by something that I say, I want you to challenge yourself. Say, you know what? I'm going to at least listen to what this character has to say, and then maybe I'll try to apply some of his strategies, because one of the things that I preach a lot is, and I don't try to make people feel like they're less or more. It's just reality, right? It's a reality that LeBron is worth, hundreds of millions of dollars. It's just a reality, right? It's a reality if you don't have, that type of capital. And there's a reality also that there's a lot of people and educators that are out there that are teaching you guys how to be safe, how to get into this market, but they're not teaching you from experience. They're teaching you from a book. And there's nothing wrong with that. I have lots of friends and family that's out there. I have, I know that this education space, you can make a lot of money in it. Unfortunately, we don't really vet a lot of the people that we come in contact with. So, during COVID, from COVID until now, a lot of people, because they were sitting at home and they were getting those stimmy checks, right? Got involved in investing and trading in the stock market, right? And then you found out really quickly that if you teach it, you can also make six, almost seven figures just teaching it. But what's happening is that a lot of people are teaching, you know, about the market, and there's a difference between teaching the market and teaching your experiences, because your experiences is what's going to take you to whatever goals that you have in life. And the education part is cool and it's nice to have, but experience is what gets you to the levels that you dream about. So you got to start learning how to make this investing and trading thing a lifestyle. And that's what I've done over the past couple of years. Anytime you guys see anything that's on my Instagram page, I'm not one of those types that come on in front and be like, "Hey, look at this place that I'm renting," or "Look at this place that," I rent like Airbnbs, of course. Anything that you see me driving, I'm driving it. Like, those are vehicles that I'm driving that I paid for cash through the stock market, right? If you guys see me taking vacations and this, that, and the other, I don't try to front, but I also am not trying to stunt to make you feel some type of way. I'm trying to show you guys how an average Joe can lose everything. And if they're educated and they adopt this culture as a lifestyle, then you can get to those levels that you want to get to. I'm not even at the levels that I want to get to yet, right? There's a lot of work that I still need to put into play. And to be honest, I do a lot of these videos, guys, just so that I can watch myself, because that's the only person that I'm competing with. I'm competing with myself to get better over the years. And there's a couple of tricks that I want you guys to start doing so that you can get to those levels that of course, that you've dreamed of. Now, I am a consultant. After I started making a lot of money in the market and I started educating myself, well, first I educated myself, and what I did was, I'm the type of person that's from the old school. I'm from a period where you don't get no clout unless you proven yourself, right? Like, you can say you did this, you can say you did that, but I come from a place where I'm not even allowed to speak unless I've done something, right? And that's just the culture that I came from. And this culture is different. This culture is kind of like a fake it till you make it. And you know, just because I'm this or that, you should follow me and this, that, and the other. And social media has done that. So, I took a long, while I was going through my journey, I was telling everybody my journey, but I never decided to teach anybody because I didn't feel like I had the right to teach. I didn't feel like I had the right to consult, because I'm like, hold up, if I only got $2,000 or $4,000 in my account, why am I going to teach this person how to be a millionaire? I only got $4,000 in my account. And this is not to discourage any teachers that are out there. I just want you guys to just be a little bit more honest about how you guys approach it, because more than likely, the people that are learning from you, they don't care about your position. What happens is that when they find out, that you might not be investing or you might not be trading, that's when they feel kind of bad, right? And I have no problems with people going out there and doing whatever you're doing. Just be a little bit truthful about where you're at and why you're doing it. And I think that's why a lot of people love listening to my stories and what I'm doing. Like, I tell you when I'm buying something, I tell you when I'm losing something. And the insider trading room is one of the only rooms where I'll come out and I'll tell you guys when I'm buying. I'll show you guys when I'm losing. Why? Because I've done this for so long that a loss is just part of the game. And if you can't accept a person that's teaching you, that's going to show you that I'm going to lose every now and then, but I'm also going to win, that's what gives me my validation. So when I created What Would Joe Do, it wasn't about everybody listening to me because I'm just a guru and everybody should listen to what I'm saying. It's literally so that you can go through a process where you can ask yourself, I have this Apple stock, I have this amount of money. Am I intraday trading? Am I swing trading? Like you got to go through the flow of questions to decide, why are you buying it? Because a lot of you guys are a lot of you guys are coming into the market gambling because you don't know what to do. And I get that all the time. Like, what should I buy, Joel? Well, how much do you want to make? Right. And then if it's how much do you want to make? Well, then why are you investing in that? And when I see other teachers teaching that can't answer those questions, that's how I can quickly figure out who the fakes are and who's actually real. Because if you've gone through that process, you know that most of the questions that you guys ask in the room are very, very vague. So I need to be really, really specific to figure out what your goal is. A plus B can equal C, but if I only have one part of the equation, I can't help you. So, as I started to understand the market and adopt it as a culture and had it become my full-time job, and I was doing all aspects of the market, I decided that I wanted to consult. I started with my kids first. Those were my guinea pigs, right? I was teaching them how to invest. And then after about 6 or 7, 8 years, I actually decided, all right, I think I have enough knowledge. I made enough money, right? I'm almost at that millionaire status. I think I can come out and do some consultations, right? And as I started to consult, you guys would be surprised at all. I've done thousands and thousands of consultations. There's a common denominator, and I'm going to show you guys some of the common denominators through this slide. And I'm going to get to you guys as stocks, but of course, this segment is about investing is a lifestyle. So let's start off psychologically, right? Let's talk about the bad. All right, because people are losing right now. All right. And there's certain people that we're listening to, including myself. You guys are coming into the room. I've given out some investments that I'm buying, like PayPal, like Square. Salesforce has been doing well. PayPal dropped about 25%. Facebook dropped about 25%. Now, my investors kind of understood my position in it because they're like, oh, guys, you can't get mad at something if it drops 25% if you're holding it for 1 year to 10 years. It was my traders that came into the room all angry and mad and, oh my God, and you talking about buying PayPal and now I'm losing on it. And I'm like, if PayPal, like in any other business, if we were looking at real estate and I bought a piece of property that was $100,000, and you know that you're buying it as an investment, you renovate it, you put renters in it so that you can make money in the future. If you come back 3 months later and the house across the street is $75,000, more than likely, if you got the capital, you're going to go and buy it. The stock market is the only market where people actually get upset when it goes down in value. And I never understood that. And that's why most traders and most investors, they don't really even know what they're doing. So when they come and they consult with me, I ask them, like, how are you approaching the market? So the worst investors are traders. And I'm going to tell you guys why. Traders are people that buy the market. They think of the market like flipping property. Now, I'm a trader. I'm a trader and an investor. I understand both sides, right? So I understand when a trader goes into a market, they want to look for momentum. They want to look for things either going down or things going up. So as a trader, most traders are shorting or betting on the market going down. So when you give them something like a PayPal and the market is going down, a trader is not going to understand it, but a trader is also very, very negative. Most traders don't know how to invest. They are the worst investors on the planet. Unfortunately, a long time ago, when I first got into the market and I had a string of trader friends, we all were the same way. We had all of our money trading, like whatever amount of money we had access to, we were trading it, right? And then the traders that weren't able to figure it out and say, you know what, why am I not investing? Most of those traders, if they didn't start investing, are in the same position that they were 10 years ago, because investing is where you're going to earn all of your wealth, not through trading. All right. So most of my trader friends, most of the people that were around me that were trading, they made a lot of money. Think about it. If you had $100,000 in your account and you made 20, 30, $40,000, More than likely, you're going to go and buy a new car. You're going to put a new roof on your house, but you're not reinvesting in yourself, right? So what ended up happening was traders, they don't realize this. Trading is just like having a 9 to 5 job. If I had a 9 to 5 job right now, it doesn't matter if I make $400,000 a year. If I don't have any type of investments, if I don't have a 401k, or if I don't have any real estate, even though I'm making $400,000 a year, if I'm spending that money, I'm going to be in the same position 10 years later, and I'm going to have to keep working. And 10 years from now, everything is going to be higher in price. So this is the test, right? When you go and you're listening to either an educator or your friends or your family, and they try to tell you how to approach the market as an investor, ask that individual, out of all the money that you have in your account, what percent is invested and what percent is trading? If that individual says that more than 50% of the money that they have is trading, I want y'all to run, because they're going to have a negative view of the market. Traders are in and out the market. They are the scaredest people when it comes to investing, because they're always looking up and down. They're neutral. Like if they come into the market and the market can go up or down, and right now we're in a period where things are going down, they're never going to invest. And if they don't take the time to start putting money to the side into their selves, they're going to be in the same position 10 years later. So many people argue with me over this point. And the people that are arguing with me, I simply ask them, what percentage of your account is invested and what percentage of your account is trading? And right after I say that, they don't have anything else to say. And then I ask them, where was your financial position 10 years prior? And what is your position today? And it's always crickets. It's always excuses. It's always this, that, and the other. The worst investors on the planet are traders. So, guys, you got to start thinking as a trader, or you got to start thinking as an investor. Now, the worst traders are investors. All right. So you got to know who you're talking to or who you're talking with when it comes to approaching the market. Now, I'm going to be honest with you. When you guys are going and doing your if you get a wealth manager, and I have a wealth manager right now that handle, we have a wealth manager that handles our wealth. Our wealth manager is looking 10 to 20, 30 years out. They're not looking day to day. So they're going to try to put me in a position where I can buy things, I can, and those assets can go up in value. That's their whole primary focus. And I understand that when I'm talking to my wealth advisor. Wealth advisors are hardly ever going to want you to go out there and buy options or trade the market and try to make, 10, 20, 30%, right? They're just not going to. Now, I'm not saying that they're the worst. I'm not saying that they're the worst traders, but they are the worst traders. All right. And a lot of my wealth investors, we laugh about this all the time because they understand their positioning. And because I can do both, I understand both arguments. But do you understand what you're doing? Because some of you guys just don't. You guys will take a position and you literally won't know what to do with it. I want you guys to trade and invest at the same time. But if you're getting educated on the education side, you probably want to talk to somebody who A, either is investing, or B, has invested in the past so that they can show you guys what to do. Because the worst thing in the world is learning something from an individual that literally has the same dreams that you have. All right. We got to stop doing that. We got to start vetting the people that we're talking to. And we got to start understanding and not offend. You can't get offended even if you're in that position. Remember, has given time has allowed me the position of being able to consult and educate you guys. It's not day one. It's not even year one or year two. I've been doing this for over 13, 14 years. I didn't even decide to do this until year 8, 9, and 10, at least to educate you guys. So I always felt like I've done it the right way, I've done it the correct way, I've done it the legitimate way. And if you're if this is something that you're dreaming about getting into, well, first you got to know how to separate your brain, separate your style, and just be honest with the people that you're coming in contact with. Even if you're not an educator and you're in the room, like, guys, quit coming in the room and trying to tell people what to do. Right? I know a lot of us, maybe at home, we don't get the respect that we need from our spouses or our friends and family, but this is real money that everybody is using, right? So if you're not going to come with statistics, and you don't have a reason for buying something, that's why a lot of the posts are not being posted in the room. We used to let everything fly. Then I started to realize our room looks just like everybody else's room. So I stopped doing it. Right. So I'm the one that approves every post that comes into the room. Like, I'm the one that's sitting up at night doing it. All right. I'm also the one that's approving anybody that wants to say anything. So if you've tried to say something in the room and you haven't been able to say it, just message me and say, "Hey, I'm trying to comment on a post and I'm not able to comment." All right. I'm the person that you want to come to for it. All right, but I want you guys to start asking those questions like, "Hey, like, why are you telling us to buy Apple? Like, what's your strategy? Is it short term? Is it long term? Is it medium?" Because then you will see a different reaction or a different approach if you're trying to make money, but you got to know what you're doing. And believe me, guys, the worst traders are investors, and the worst investors are traders. Wealth is built from investing. Wealth is not built from trading. All right. The richest people in the world are not traders. The richest people in the world are investors that might know how to trade, because trading is a skill. It's a 9 to 5 job that's used to generate income so that you can build wealth in yourself. Okay. All right. And I want you guys to understand that. I know I have the millionaire challenge that's out there where, we're trying to we're trying to take 1,000 to 1 million, but at some point you're going to have to reinvest in yourself. Okay. Because that's where wealth is built from. Trading is fine. I want to see people make 6, 7, 8 figures from trading. But if you can do that trading, then your wealth is just going to go to levels that you've never dreamed of it going to. The worst investors on the planet are traders that are bearish. Now, what do I mean by that? The worst investors are traders that are bearish. All right, so check this out. Let's say back in 2010, 2011, all I did was trade. All I did was trade the market. And think about it. I always say that traders are the most scared, because a trader can trade the market, be out of the market, and then go to sleep at night and wake up the next morning and a bomb can hit and it won't affect them. And they feel comfortable with that. And what ends up happening is, if you keep doing that over and over again and you're not reinvesting in yourself, you're going to what you're doing is your fear of the market, you're validating it by getting up every day and saying, "See, you see, that's why I didn't invest in the market. See, that's why I didn't invest in the market. I told you guys this stock was going to go down. See, that stock went down. That's why I'm not investing in the market." So all you do is trade, trade, trade. And then 10 years goes by, 20 years goes by, 30 years goes by. And you're still talking about, "See, that's why I didn't get in the market." And the market is now up 300%. That's the same thing that happened in the last 10 years. I'm going to show you guys some charts. There's nothing wrong with being afraid of the market as a trader. As an investor, you should be systematically investing in the market every single month, on the first of the month, or every quarter, in certain stocks or certain asset classes that can build in value. And the reason why you can't is because the worst investors are traders that are bearish. Okay. Because it's never low enough for you. Because, guys, think about it. The market had a triple whammy, right? You had interest rates that were going up. You had the second year of a president's term, which is usually the worst, and there's increased volatility, right? You got the pandemic happening. Then you got Russia. You got a war going on. So the market has sold off. Now the market should be down 50, 60, 70% if the market was really truly in a very bad position. But what you guys don't understand is, think about it. The only reason the Feds would raise interest rates is if the market was healthy. If the market is healthy, we're going to raise the interest rates because the market can take it. So if you know that the market is healthy and they're going to raise interest rates and now the market is down 20%, why are you not investing in the market? It's setting you up to make money in the next 5 to 10 years. But the worst investors are traders that are bearish. They ain't never going to invest. And a lot of us, 9 out of 10 of my friends are like this. 9 out of 10 of my friends have watched me accumulate wealth over the last 10 years. And then they're finally like, all right, Joel. And I mean, they have a right, right? In year 2, 3, 4, you shouldn't have believed what I was saying because I hadn't proved anything to you guys yet. But then after year 8, 9, 10, right? And then I started showing receipts and started showing you the things that I've invested in. You have a couple of people that are like, all right, Joel, I think you're kind of right about this market. I'm thinking about getting in now. Right. And now they're going through this process of, I want to do it, but I'm so afraid because they haven't established the fact that investing is a lifestyle. Investing is a lifestyle, guys. If you want to be wealthy, there's a lifestyle that comes with it. You got to systematically approach the market in a certain way. I always tell people that you need to be investing, trading, and if you can on your day off, intraday trade, just to get an idea of how the market works. But everybody should be at least investing. All right. So make sure my volume is on. So the reason why a lot of people can't make money is you worry so much about losing, you can't win. You worry so much about losing, you can't win. You worry so much. Oh my God, what if I lose 5%? I got to go tell my wife I've already lost money. I've already lost my job. Joel, I can't afford to lose no money. I get it. Guys, I was a millionaire. I had over 10 properties. I was a millionaire on paper. All right. I was a millionaire on paper when I was doing real estate. I flipped it this time because I said, you know what? I was a millionaire on paper. The government came in, took everything from me. I said, I'll never in my life ever be in that same position again. The next time I become a millionaire, I want to be a millionaire liquid. Okay. Because you can't take that away from me. Maybe tax me on it, but you can't take that away from me. But you guys worry so much about losing, you can't win. Imagine what I was going through after losing everything, convincing my family that my new career is going to be investing in the stock market. I couldn't worry about losing. Maybe it's because I lost everything. I was already at the bottom. My stock was low. My stock was low. I couldn't go no lower. Maybe that's where a lot of you guys have to be to understand it. But a lot of you guys are already there, so you might as well invest. Go buy something like Apple, go buy something like Disney, but you have to adopt it as a lifestyle. Do y'all know that 90% of stocks, 90% of the stocks that are out there have I'm not 90%, 100% of the stocks out there has a 90% chance that it will eventually go back to its all-time high. So if it formed an all-time high, even during the pandemic highs, at some point, it might not be the first year or first 2 years or 3 years, but eventually you have a 90% chance that that stock will go back to its highs. So that should tell you something, that the market is rigged to go up. It's rigged to go up. You got governments printing money. I don't know if you guys heard the Fed chair today, right? But they were talking about that we haven't experienced inflation like this in 20 years. He said since he was in high school. Governments are printing money across the world. It's not just America. We had to print money because COVID came in and everybody was sitting at home. So we had to keep the economy going. But with that printing of money, it caused an inflationary environment, meaning the cost of everything went up. Real estate went up, cars went up, Stocks went up. If you're not invested in those things, then you don't feel the effects of the inflation, but you feel it now when you go to the pump. Everybody's complaining about oil right now. Well, why weren't you invested in oil? You knew it was going up, right? You saw it ticking up. It's because we haven't adopted this as a lifestyle yet. When you adopt this as a lifestyle, you understand the rotations of oil and why oil is going up, right? Think about this, guys. When a stock drops in value 50%, you guys are so worried about 50% that you can't make 100%. Because when a stock loses 50%, when it ever goes back to its highs, you're going to make double the amount. The more that stock drops in value, the more money you make to the upside. So that's why I lick my chops during periods like this. Because, yeah, my investment accounts drop in price. But if my investment accounts are up 400%, think about it. If I had $100 and that $100 went to $400, and then that $400 lost 50%, it's going to drop to $200. Well, shoot, if I started at $100, I'm still up double. Yeah, it dropped 50%. But guess what? If I start investing more right here, I'm going to make double the amount of money I have now when it finally gets back to its highs, because the market's going to recover. The problem is some of you guys are just getting into the market now, so you don't believe it can go up. You're just like, Joel, this is it. I watched The Big Short. This is it, Joel. Stocks are going to zero. And I'm like, you obviously don't understand that the stock market is us. The stock market is our lifestyle. If you think that our lifestyle that we're living right now is going to end, then don't invest in the stock market. But if you believe that we're here in America and America is going to do whatever it takes to make sure that the rich stay rich, then you got to think like the rich. You got to think like millionaires. You can't think like your thousandaire friends. Your thousandaire friends are not going to make you money in the market. They're too scared. They're so afraid of losing money. They don't know how to make money. You can't listen to your trader friends because they're in a stock and out of the stock. They're the worst investors on the planet. You got to listen to your wealth managers, and you got to listen to people that have invested during periods where the market dropped 20, 30, 40% and then bounce back. And every single solitary investor is going to tell you, if I know what I know right now, I would have invested more money back then. That's every single solitary investor's story. Okay? But if you don't make it a lifestyle, if you're scared of the market, if you treat the market like a trader, if more than 50% of your assets are trading and not invested, you are going to be in the same position in the next 10 years if you're not invested in stuff like real estate or have a 401k or have an IRA or invested in anything. And that's how the majority of us have approached the market anyway. All right. Investing is a lifestyle. This isn't to stunt on y'all, right? I don't have the best six pack out there, but I have one. All right. This isn't the best ski resort to go to. This isn't the nicest house in Barbados, right? This is to show you guys that you have to adopt this as a lifestyle if you want to make money. Because I can say I'm a millionaire. That's just a fact, right? And there's a process that you got to go to mentally to get there, right? And it's not just getting educated, it's getting experience and educating yourself as you go. The best education is experience. Some of you guys think the best education is education. You go out there, took 10, 15, 20 classes on how to buy a stock when you should have used that $10,000 or $15,000 and put it into Apple. That's how you're going to make money in the market, investing in yourself, taking that significant other or your family and sitting down and saying, guys, how are we going to approach this? We know it's going to be hard. We know there's going to be ups and downs, but we got to know when to put our foot on the gas and when to sit back and stunt. 2021 was all about stunting from the money that we made in 2020. 2022 is all about investing. Are you investing? I am. And I'm showing you guys what I'm buying. So that when 2023 and 2024 comes and y'all see Joel stunting again, you can understand where that hate is coming from. I'm showing you the process. All right. I do consultations all the time. I know the mind of a millionaire. I know how they think and the process that you got to go through to get there. You got to adopt it as a lifestyle. So for those out there right now that don't have a 401k, what you're going to do today is if you got a significant other, you can say, you know what? I'm all about investing now. This dude named Joel came in and fired me up. Everyone should at least have a 401k or an IRA. If you got a check coming in, right? If you got a salary coming in, if you have income coming in, you can set up an individual retirement account. We call that an IRA. Why? Because you got to have your foundation in place if you want to make a lot of money in this market. You got to start there first. And it's the place that nobody ever wants to start because it's boring. Joel, I don't want to do this. I want to take that 6,000 and put it into Tesla and make it turn into a million. We'll get there. But you got to start with your foundation. Remember, I got a lot of millionaire friends. I know the processes that they had to go through to get to where they are. Just about 100% of them are going to have retirement accounts. If their company has a 401k, what they're doing is they're matching it and they're maxing it out, right? They're maxing their 401k out because they're taking advantage of America and what America put in place so that people like me can stay in the 1 and 10%. Every single person on this call can set up an IRA right now, and the most that you can put in it in a year is $6,000. So we're going to use that number for the next 10 or 15 minutes before I get to you guys' stock. I'm going to get to you guys' stocks. I promise y'all know that I always do it. $6,000 is the most that you can put into this IRA. You can go to TD Ameritrade right now and set up an IRA. You can go to Fidelity right now, call an operator, have them help you set up an IRA. If you have a wealth manager, they'll help you set up your IRA, right? If you already have a 401k, don't worry about it. Your wealth manager is already handling, the wealth side of your account. Now, if you had that $6,000, a lot of people think that $6,000 ain't a lot. Well, watch this. I want everybody to make a 10-year commitment, just like I did with my family. Let's make a 10-year commitment. I told my wife and family, don't expect me to make money for the next 7 years because I'm going to struggle. And it was fortunately, I started making money after 2 years. But guys, a business, a lot of you guys don't know this. A lot of you guys that have entrepreneur minds or have spouses or significant others where there's a stable income coming in, but on the other side you want to start a business. Did y'all know that the average business does not start making money until after 7 years? And to be honest, I was making money on the investing and trading side, but I didn't even really start educating and start getting that passive income until year 7 anyway, right? When I started doing consultations. So you got to give yourself a 10-year commitment, but you got to be realistic and say to yourself, are you willing to ride? Are you willing to be a ride or die like you said you are for 7 years and hold down the fort and not look down on me while I'm trying to create this business that's going to make us more money than we ever dreamed of, right? You got to have realistic expectations, but you got to know how to position yourself the correct way because a lot of you guys are not doing it correctly. You're taking all your money and just trying to trade. You got to set up your foundation first. Set up that tax deferred account, with your IRA. If you got a salary still coming in and you got that 401k, the first thing you do is you max it out, especially if you're getting matched, right? But you got to make a 10-year commitment to yourself because even if you had invested, think about this, guys, even if you had invested $500 into the S&P 500. So a lot of you guys don't know this. The S&P 500 is pretty much the economy. This is what every investor, every trader looks at, right? If you just invested $6,000 a year, which is $500 a month for the last 10 years, you would be sitting on about $140,000 right now. And every single person, I don't care if you got 10 million in the bank, everybody could use $140,000. You can go buy that Porsche Taycan that you've been looking at, right? You can buy that one bedroom beach home in Barbados that you've been thinking about. That one bedroom condo that you can Airbnb and make it passive income. And all you did was invest $500 a month with no overhead, guys, no overhead into the S&P. Now the S&P is so boring, I don't even like talking about it. That was the last 10 years. But if you establish this, if investing becomes a lifestyle for you and you go hire a money manager to handle your management, then these are the types of things that you're going to know about. This is what your money manager is putting your money in, right? Because this represents the market. And if uh, anytime you turn on CNBC, anytime you turn on Bloomberg, this is what you're going to see at the top of the ticker, the S&P, the Standard and Poor's 500, which represents the 500 largest companies in America. And that's what you're investing in. If you invest in this, you invest in America. And you would have averaged about 15% a year. I know a lot of you guys are like, but Joel, I got this CD that's paying 3%. And this is guaranteed money, and I don't have to worry about the ups and downs. Well, guess what? You're so scared about losing money, you can't make money because it's just numbers, people. It's just numbers. You didn't start off. Now, if you had $10 million and you're like, Joel, I don't want to lose this 10 million. And I'm cool with making, $300,000 a year off that 10 million. Then I'll be like, oh, okay, that makes sense. 3%. All right, that makes a lot of sense. You can live off of that. But that's not where a lot of you guys are. A lot of you guys are trying to hit millionaire status, and most of us need about 5 or 10 million if we want to retire, especially with inflation. Shoot, it costs what, $100,000? If you want a brand new pickup truck, it's gonna cost you $100K. $100K for a pickup truck. Now, I love the Denali's that are out there. Don't get me wrong, for you pickup truck owners. I also owned a pickup truck back in the day. But I'm just trying to show you guys how things have changed over the last 10 years. 10 years ago, if anybody had told me that they were buying their everyday truck for 100K or 115K, I would have started laughing. Like, are you serious right now? That's how much a Ferrari costs or a Lambo. And you telling me a pickup truck is going to cost that much? Yeah, because of this inflationary environment, and wages are starting to go up. At least on the lower level, they're starting to see wages go up, and everything around you is starting to go up in value. Real estate, you can't even buy real estate here in Atlanta. It's going through the roof. Now it's going to calm down because interest rates are going to start going up, which is going to hold the real estate market in place for a second. But if you invest this as a lifestyle, if you're investing in yourself, you can capitalize on the market. A lot of us want to, we're into travel and leisure, right? Travel and leisure is something that most of us want to do, even if it's just staycations. I know some people that ain't left their state, and I get it, right? I understand it. But most of us every now and then just want to get out of here, right? Adopt it as a lifestyle, right? So one of the traveling leisure companies that are out there is something like a Disney, right? So even if you have kids out there, if you have nieces or nephews, or if you have any kids out there that you're looking over, right? Get them into investing in stuff like Disney, right? Do y'all know that if you had just put that same $6,000 into Disney, $500 a month for 10 years, you already have their education. Look, you can pay for 1 year of education, $100,000. All right. But you have the education already in place over investing in something that they would invest in. They know about Disney, right? Investing is a lifestyle, guys. You got to invest in yourself. And yeah, you would have earned 10%. But I'm trying to show you guys companies that, like, we always feel like we got to find that company that nobody's ever heard of, right? Nah, you can invest in the companies that are around you that's part of your lifestyle, right? But you got to get a little bit educated, look and see what the performance has been over the last 5 or 10 years, see if there's still some growth potential. Do a consultation with me. I'll help you with all of those types of things, right? But you got to adopt it as a lifestyle. These are real numbers. I plugged this in and it gave me these numbers. This isn't what I did. This is something that all of us are able to do. My kids are what, 16 and no, 16, about to be 17. I got another kid that's 15. I remember when they were 5 and 6 years old. I remember. And I remember saying to myself, man, I want to invest in them so that I can have, when they graduate, they can have they can have some money that they have access to. What if they get scholarships and they don't have to pay tuition? This is just money that can grow for your kids in a company that's a no-brainer. And guys, this is even through the pandemic. At one point, this account was worth 120,000 and it dropped to 100 because that's what stocks do. Stocks are going to go up, they're going to go down, but if you're investing in yourself, if you adopt it as a lifestyle, you learn how to create that wealth for yourself. Most of us are into health and wellness, right? And I'm going to turn off a lot of people when I say this. All right? You know, we have mind, body and spirit. We have mind, body and spirit, right? Mind, my brain, body, and spirit doesn't necessarily have to be spiritual, right? You don't have to be religious, right? But the spirit, the energy that you have behind what you're doing, that's your spirit, the energy that's behind you, right? And people can feel that energy. I can feel different people's energy when they come in the room. Y'all can feel my energy through the computer. Y'all can see the passion that I have for this. You guys can say to yourself, this dude is the real deal. He can't be a fake because look at the passion he has behind it, right? But one key to this that a lot of us are not paying close attention to is the body. And the body is because most of us are self-conscious, right? Back when I was 18, 19, 20, right? I had the body of a god. I just did, right? I was a swimmer. I think I had 3% body fat, right? So even if I didn't want to have a body, I had body, right? And what so many of us do is we always look at our old selves because we're still competing with our old selves, and we say to ourselves, why can't I look like I did when I was in my 20s or when I was in my 30s? And back then I was what, 165, 170. I think I'm like right around 200 pounds right now. And what I've done now is, even though I don't have that same body, it doesn't mean that I can't remain healthy or at least trying to be healthy every single day, right? And when people tell me, hey, Joel, you might need to work out, I don't get offended anymore. I say, you know what? You're right. It's the same thing when I come to my friends and I say, man, you need to start investing in yourself. They immediately say to themselves, oh, you just think you can say something to me because you're a millionaire and you know that I'm struggling over here. So then they get mad and angry and then they don't want to talk to me no more. When the reality is, they should have looked themselves in the mirror and said, you know what? A friend wouldn't tell someone who they truly know wants to be better what they need to hear, right? What they need to hear. And what a lot of us need to hear and understand is that you're going to do better as a trader, as an investor. Guys, you're going to be better. Like I hear a lot of people complaining about what's going on in their bedroom. And I'm like, go and work out. Go work out about 2-3 days a week and then try sex again. I promise you it's going to be better. Why? Because you're going to create endorphins. You're going to get that blood circulation going, especially for guys my age, right? It's just going to be better. Your brain is going, you're going to clear your mind. You're going to clear your body of these impurities, right? You guys got to get in a system where you're trying to get better, and it has to be mind, educating yourself. It has to be body, try to eat a little. And I'm not saying go totally vegan tomorrow. It's just small steps. You know what? I know I supposed to be eating about 2,000, 2,500 calories a day. Let me try eating 2,400 calories a day next week. And let me see what my calories are doing. Because I kind of want to see what I'm doing. Because when I first started, I struggled because I wanted to eat everything that I'm eating right now. And my brother's a triathlete, and he told me, look, man, you can eat whatever you want to. Just eat it. You don't have to gorge everything. Like if you want to eat ice cream, you don't have to fill up your whole bowl, right? Just get a 3 or 4 scoops, satisfy that urge, and then keep it moving, right? You can cut down in that way. You don't have to completely stop doing it, but you going through that process every day, you're going to see that same process in the way that you invest. You're going to see that same process from your significant other because believe it or not, your significant other, when they see you trying and they see that you're trying to do better, you're not going to hear as much of this in your ear, right? You're just not going to, right? Sex is going to be a little bit better because you're in a different mind space. You got a little bit more confidence about yourself, right? And if you truly are ashamed or really don't like what's going on with your body, be the best dressed person that's out there, right? I've seen lots like Lizzo, for example. I love Lizzo because Lizzo owns who she is, right? She just owns it, right? And she actually is trying to be healthier, even though she's a big woman, right? And it's that piece that's going to help you guys get to the levels that you want to get to. But the confidence has to start here. It has to start with your mind. It has to start with your mind, which then is going to be able to help you with your body, which is going to give you the spirit and the energy that you guys need to get to those levels that you need to get to. So, one of the best companies that are out there that's involved with health and wellness is Nike, right? Imagine you putting $6,000 into Nike. Because again, investing, in my opinion, is the easiest thing on the planet to do, especially if you have a strategy about going about doing it. Well, if you had invested $500, and this is even through that Kaepernick period where Nike stock, everybody was was burning Jordans. It was crazy to me, right? But even during that period, if you had invested that $6,000 into Nike for the last 10 years, you would be sitting on $180,000 right now. Investing is easy when you go through the process. And guys, you could be trading on the side with whatever amount of money you want to, and you still got access to 180. I don't care if you lost 200,000 trading. You still got $180,000 sitting there investing in, health and wellness type companies, right? And the reason why I'm doing this is to show you guys it's not that hard to find a company where you can earn 20% a year on it. Nike is the leader in its space, right? The S&P 500 is what everybody's invested in. It averaged what, 16 or 17%, right? Disney, what did Disney average? Disney averaged 10% a year, right? You're talking about the S&P, Disney, Nike. We're not talking about astronomical numbers, right? A lot of you guys who have a career, you're an expert in your field. You're an expert in your field. So why are you not? Now I get it. Some people can't invest in stocks because of the job that they have. I get that. But if you're an expert in that field, why are you not investing in that field? You understand it? It's almost like cheating. It's almost like insider trading. You know the ins and outs of that business. Why are you not invested in it? It makes no sense to me, right? When I was a real estate agent, right? And I lost everything, and everything I knew was real estate. The only two companies I kind of really knew about was what was it? It was I forgot. It wasn't John Whelan. It was DR Horton, right? It was a builder, a big builder that's here in Georgia. I don't know how big they are across the nation. And all I knew was Apple Gold, because I wore gold chains, Apple Gold chains, and companies like DR Horton. Well, one of my favorite companies now is Simon Property Group, which is a commercial real estate company. But at that particular time when I was losing everything, I told everybody, I'm about to go commercial. I'm about to go commercial. And even if I lost everything, I could have started small and said, you know what, I don't have that commercial building yet. But what I can do is I can put $500 in an established, REIT or real estate company. And as that company starts to do well, I can start generating a little bit of appreciation as well. And even though this only gave you an annual return of 3%, you still will be sitting on $70,000 right now. Most of us can start a business now with 70 grand, right? I can go put a down payment on that duplex or that triplex that I'm thinking about buying. Yeah, it took 10 years, but guys, believe me, 10 years is going to go by just like this. So I want you guys to start thinking about the next 10 years. You got to make that 10-year commitment. Okay. Let's just say you wanted to be that intelligent consumer, right? That's not the real Steve Jobs. I was at the Fisherman's Wharf in the Wax Museum. All right. But let's just say you just want to be an intelligent consumer, right? I want to buy the Costco's, the Apples, the Targets, the Walmarts, the Home Depots, right? Let's just say you took that same $6,000 and you put it into Apple. Now, at the time, Apple was I think it was one of the fifth largest companies. At the time, it might have been number two or three at this time, right? Might have been number one. I got to go check. If you had put $500 in a company that everybody and their mama knew was going to grow in value, like this was a no brainer trade 10 years ago. I get it 20, 30 years ago. This was like right after Steve Jobs died. This was a no brainer investment. If you had invested that $6,000 into Apple for 10 years, most of you guys could be buying your first new home right now, cash in Atlanta. You can't get a brand new house for less than this anywhere else. In Atlanta, you can get a brand new house, right? You would have earned a 33% return. And guys, we're talking about $6,000 a year, $500 a month, $125 a week. But guys gotta make this a lifestyle. You gotta adopt it as a lifestyle. Investing is a lifestyle, right? You got to go through the processes. Am I investing or am I trading? If I'm trading, why am I scared? Well, because I'm trading. So traders are supposed to be fearful because we're getting in and out the market. Traders are like home flippers. Home flippers can't just decide they want to flip a house in November, right? They got to figure out, why am I flipping this house? And when it's done, is it during a hot period where I know that I can sell it? I got to go look at the comps. I got to go see how fast homes are selling. Now, in this particular environment, you can buy a house at any time, but traders think like home flippers. Investors are looking long term. This is what your wealth managers are looking at, right? Your wealth managers can handle, I don't want you guys to go fire your wealth managers. Your wealth managers can handle your boring accounts that's averaging 10 or 15% a year. You can also set up your own IRA and do this, and you can trade on the side. And remember that question I want you to ask all your friends, because that's going to tell you who's going to be where in the next 10 years. Ask your friends, say, out of all the assets you got out there, how much is invested in stock and how much is trading? If they say, oh man, I don't trust the market, so I got all my money in a trading account, close your ears, because they don't know how to invest and they're going to steer you away. They're going to always be afraid of the market. Believe me, guys, I do consultations. All right. 99% of the time, I'm dead on with the people that I'm talking to because I see their financial status. I see what they're invested in. I listen. I'm a very good listener. I know I talk a lot during my consultations. I'm a very, very good listener because I'm trying to help you, because I know where you are, because I've been there. But in order to get to that next level, you guys got to start understanding some of these key points that I'm trying to show you guys. Let's look at Apple, and I'm going to get to I'm going to get to your stocks in a second because it has been an hour. All right, well, I'm almost done. All right, look at Apple. Let's say you had $100,000. Most of us think that this is how a trader would think. A trader would hold Apple. Apple would go from 100,000 to 250, even though that's an investment. And then if Apple drops even five or $10,000, they sell it. An investor says, I'm in it for the long run. If you had $100,000, this is the type of stomach ache that you were going to have to withstand in order for it to be worth $2 million in the last 10 years. Well, 11 years. If you had invested in Apple and it was $100,000, y'all know it quickly went to 250. Imagine having $250,000 and then you look up one day and it's worth 130. You're going to feel like a failure. You are. I've had friends that were invested in Apple and had this amount of money, and I kept telling them, you're in it for the long run, right? Don't sell your investments. Your goal was 10 years. Stick with it or buy more. Some people bought more down here. Some people said, nah, I'm going to ride it out. Then Apple went from 137 to 336. That's a huge run. You almost made 2.5 times that amount. Then imagine, guys, going from 330 back to the highs from 2012. That's what Apple did. It took you back to the value that it was 5 years prior. I'm sorry, 2016, 4 years prior. Psychologically, could you have gotten through that? Most of us couldn't. The way that you get through it is by investing over here and not looking at it and trading over here. All your emotions should be over here trading with the smallest account that you have. I always tell people that your trading accounts should be about 10% of your total assets. If you got $100,000 account, all you need is 10,000 for trading. You got $1 million account, you can trade with $100,000. All right. But while you're trading over here, being emotional and looking at the war and all of your investments are dropping, don't worry about this. Because this is going to do what it's going to do. It's going to go from 220. And then when the market starts running again, it's going to go to 580, 350. Then it went to 819. Can you guys imagine an account going from 580 to 819? You can almost smell being a millionaire. And then all of a sudden you get punched in the face and that $819,000 account goes to 531. You're going to feel like a failure. Even though you started out with 100, so many of us felt like failures right here, even though it dropped $300,000. But see, $300,000 hits different than it did way back here. You used to not be able to stomach a $10,000 or a $20,000 drop. Now you can stomach a $200,000 drop. So then when this happened and it dropped 200 grand, you're like, I've been there, done that. But if you hadn't gone through the process of withstanding this move from 2012 to 2015, 17, 19, you're not going to understand. A lot of people to this day in the room, they don't understand why Joel can just sit in a trade. It's because Joel went through this process. The same process, these same drops almost mimics what me and my family, I keep saying me, what me and my family were going through. And then you got rewarded when it went from 530 to $1 million. And then guess what, guys? Within 1 year, think about this. It took you 10 years for Apple to go from 100 to $1 million. Then all of a sudden you double it in 1 year. You double it in 1 year. Now, these same results are not going to happen for you. But I promise you, if you invest over a 10 or 20 year period, you're going to see these types of results in a lot of the investments that you're in, especially something like an Apple. Apple is the largest company on the planet. And it's still giving you these types of gains. It took somebody from 100,000 to 2 million in 10 years. Yeah. It gave you a 1,800% return. Now, I'm not saying Apple's about to do that again because you got to understand market cap and growths of company and all of that type stuff, right? but it tells you psychologically what a person has to do to get through it, right? Your favorite car, right? Why are me and my family pushing 2 Teslas right now? Guys, if you had taken that same $500 and invested in Tesla, you see how we have been looking at 10 years? This is what Tesla did in the last 5. This is why y'all see me in the room doing this. This is why y'all see me in the room saying, "Did you do this?" That's where the cockiness came from. And this isn't one of the only investments that I did this with, right? A $6,000 investment is something that all of us can do, right? If you're working. A $600 investment in Tesla, I mean, a $6,000 investment, which is $500 a month, which is equivalent to what a lot of you guys are paying in car notes right now, will be worth almost $300,000 in 5 years. But yet y'all don't want to invest in the market when the market is down 20%. And I keep telling y'all, this is when you're supposed to buy. I don't understand why y'all ain't buying. This is how it feels to buy when the millionaires are buying. This is millionaire territory. Thousandaires, I ain't buying it. Well, if you're not buying it, when are you going to get back in Apple? If Apple did this move, when are you going to buy it? When it gets up here? When are you going to get back in? And that's the problem that a lot of scared traders can't tell you. They'll tell you, don't buy it because it's going to go down. Feel validated when it goes down. But then you're like, when do you get back in? They can't tell you when to get back in because they're too negative on the market. Been there, done that, guys. I do consultations. All right, so we're going to do the millionaire challenge. All right, let's get to you guys' stocks. All right. Look and see where you're at right now. Only you know where you're at. The hardest place to get to, the hardest numbers are going to be 8, 9, and 10. Most of us can get the 7. You got 70% of the pyramid already done. 8, 9, and 10 are the hardest because numbers start to jump. The numbers start to grow faster than than you've ever seen before, right? You start seeing numbers that your brain hasn't even caught up with yet. And that's what happens. It happens to all of us. The numbers always start small, but then when it starts getting into 6 figures and then close to 7, those numbers act different. You might look up one day, you might be down $30,000. It's different when you only have 30,000 because people don't understand it. You're like, hold up, that's what I'm making a year, Joel. But if you go through this process, 6,000, a year ago by, 2 years ago by, 4 years ago by, 10 years ago by, doubling that money is the quickest way to getting to $1 million, right? But you got to start with something. You gotta understand that the quickest way to making $1 million is not saving $50,000 a year for 20 years. It's this. So understand, investing and trading is easy. Y'all make it hard. I make a lot of people mad with this, especially when you start investing and you start losing. And I'm sorry, but time hasn't gone by yet. Let a year go by. Let 2 years go by. A lot of the people that's been rocking with me for 5, 6, 7 years, we understand it, right? We understand it because we're all in a totally different position than we were 6 or 7 years ago. We understand the process that you got to go through. We understand the pain and the tears and the guilt and the embarrassment that you got to go through to get to those particular levels, but it's easy. The hard part is adopting it as a lifestyle. Once you start adopting it as a lifestyle, investing and trading actually becomes easy. We as humans make it hard. All right. This is the S&P 500 since 2009. Since 2009. This is the blip that happened for COVID. Does this look like it made any type of significant difference to what this has done over time? It hasn't. It hasn't. Even with the 100,000, the same scenario with Apple. Some of you guys have $100,000 portfolios now. If you've been working for 10 to 20 years, you have this amount of money, right? You have 137,000 that may have dropped to 107. Can you imagine dropping 30% of your portfolio? You're going to want to fire everybody. But everybody lost money during that time. That's what the market does. And then the market rewards anybody that can withstand it. Because how many people are going to really buy the market as it starts to go up? What's our mindset? Buy low, sell high, buy low, sell high. So why do I want to buy again when we way up here? Joe, we way up here. Why should I buy here? Well, there's going to be another 10 years. And guess what, guys? This chart won't even be on our screen. And that's where you guys have to start. You got to start somewhere. Over the last 10 years, the S&P has given you a 400, well, close to a 400% return. It's been averaging 10% to 15% a year for like the last 50 to 100 years. All right. And I want you guys to understand that. If you have a 401k out there and people wanted to know, Joel, I got a 401k that I'm investing in. All right. If you have a 401k right now and you're maxing it out, this is why I tell people that they should be a little bit more aggressive on their own. I want you to continue having this account, but get aggressive on your own. Right? If you had put $1,600 in your account for the last 16 years, that's how long it took to get to $1 million. You still would have averaged about 13% a year, but it took 16 years if you were putting $1,600 away every single month. Most of us don't have that type of capital to put away to get to $1 million. So you still start small here, but you got to be a little bit more aggressive in your own personal accounts. All right. So if you don't have my app, I want you guys to go out there and grab it. It's the What Would Joel Do app. It's free. You can get it on the iOS or Android device. If you want your charts to look like mine, I'm about to show you guys some beautiful charts. I have probably some of the most beautiful charts that are out there that I've been told. You can download it from my PayHip. If you go to my PayHip here, payhip.com/whatwouldjoeldo, there's a lot of classes and videos that you guys can take to get you educated on the market. These are some of the videos. If you want to learn about the futures market, if you want to learn about the stock market, options, futures, cryptocurrency, you can find all of these videos there. Or you can go to my my app. And with that app, there's an ultimate membership service. And that ultimate membership service is $49.99. And you guys will have access to every single video that I have available. You guys got access to every webinar week that I have. And I do have a webinar week coming March the 16th through the 18th, I believe. It's that Tuesday through Thursday. But you'll get free alerts. Like I sent out alerts today that everybody should be buying Salesforce. I bought a whole bunch of it. I think I bought 100 shares earlier today, and it was already up $6 or $7 a share. Right. So I think I made $600 or $700 just on that investment. But if I think that the market is primed to make money, you might see me send out an alert for the hot stocks of that day. You're going to look at the ATR, make sure that the average true range is there before you trade it. But learn how to trade these particular alerts. If you're having issues, just book a consultation with me. If you haven't joined any of my rooms, you can go to the Insider Trading Room. The Ninja Trading Room is only for members only. So if you if you bought any products from me, I don't care if it was a workbook, you have access to this room. You just have to show your receipt in Messenger. You can't just go to Ninja Trading and say, can I get in? You got to show a receipt. My niece is going to let you in. All right. You can go to the Insider Trading Room. There's over 20,000 members there. We're talking about the market, real traders, real investors that legally are talking about the market. And then if you have friends and family that aren't on Facebook and they just want to look at some of my free videos, they can always go to YouTube and you'll be able to watch videos there for free. All right, so let's get to you guys' stocks. Last thing, webinar week is Webinar week is, what's the dates here? Oh, March the 15th through the 17th. I know I said the 16th through the 18th. It's the 15th through the 17th. Guys, it's over 10 hours. I think I go 4 hours on day one, how to buy stock for you newbies, how to position yourself in the market. A lot of what we talked about today. Day two, I teach you guys options and how to trade the market. Day three, I teach you guys how to day trade, how to generate income daily. There's nobody out there that's giving you guys this for the amount of money that I'm giving it to you guys. It's 95 bucks, right? Most of us have it. Get educated. I pour my blood, sweat, and tears into this. I made sure that I put any and everything that I know. I know I simplify everything in its most simplistic way, but that's what's going to make you money in the market. The market is not that hard to understand. It's other educators that are out there that are making this thing hard, and it's not. And it's mostly people that are just making money through education. Sorry to say that, right? You're not going to find too many people like myself. I'm a unicorn. All right, so let's get to your stocks. Finally, we finally got to the stocks. All right, I'm going to get to everybody's stock too. All right, so let me go to the comment section and let's look at, if you have a question too, if you have a question regarding the market, go ahead and ask that question. And, I'll try to answer any questions that I can. We have Tisha Jones. Hello, Tisha. How you doing? Sorry if I messed your name up. I do that every now and then. All right, James said tuned in this. Oh, and can hear you. All right, so last time I did this session, my volume was down. I was wondering why only 3 or 4 people was on. I was like, dang, I guess nobody really wants to learn about the stock market. All right, somebody asked, what are the top 5 small cap stocks worth investing in? Now, that's a very good question. All right, so I can't say what the top 5 off the top of my head is, but I kind of like restaurant stocks, right? So I like, let me pull up some stocks real quick. I like Wingstop. Now, what she means by small cap, guys, is the size of the company. So if you've been investing by the share price, thinking that that was the size of the company, then you are what we call a rookie trader investor. All right. We no longer care about stock price because you can create your own stock price because of fractional investing. But if I was looking at my stock star list and I went to my market cap and I went with the smallest companies to the largest, I would say companies like, I love Wingstop. All right. I love, Wingstop is growing. So Wingstop is kind of like what Starbucks was back in the day. So even if you looked at Wingstop's chart, Wingstop is a $4 billion company in size. That means it's $4 billion. So if it grows to $40 billion, you make 10 times your money. Your $144 stock goes to 1,400. That's how you guys should be approaching the market, finding small companies that can grow in value. And if you're looking at the stock price and say, hey, instead of buying MicroStrategy, I'm going to buy Wingstop because I can buy 3 extra shares, then you are what we call a rookie investor trader. You don't make your money by the stock price. That is an illusion. Stock price is an illusion. Google is going to do a reverse stock split later so that everybody can afford a share of their stock, but it's not going to change the size of their company. It's an illusion. It's to trick you guys into thinking that Google just got smaller. Their stock price got smaller. The company ain't get smaller. You make your money from the growth of that company. So Wingstop is one. If you look at the 5-year performance of Wingstop, let me pull up a month chart. If you look at the 5-year performance of Wingstop from 2016 to 2022, I've made y'all a lot of money. This is one of the stocks that I told everyone to buy when they were way smaller than 4 billion in size. Went from $13 all the way to 187. You would have made 10 times your money just by being in the room. All right. Here's another one that I like, IIPR. Why do I like this one? Because Innovative Industrial Properties is a REIT. A REIT is a real estate investment trust. All right. It's also in the cannabis space. Did y'all know that this is the second largest cannabis company on the planet? A lot of y'all don't know this. This is the second largest cannabis company on the planet, and none of y'all even know about it. It's a $4 billion company. All right, that's involved on the real estate side. And not only are they involved on the real estate side, guys, they offer a dividend. Look at what they've done over the last 3 years. I told you guys to start getting in way back here. I got in late. I ain't gonna lie. I got in around this 80, 90 range. All right. I'm up close to 100%. At one point, I was up about 300%. Yes, it's dropped in price from 288 to 188. Did I sell any of my shares? No, because if I got in the 80s and we at 190, Jolie Joel is still up and I'm still getting that dividend. This is one of those companies you hold for 5 or 10 years if you believe in the cannabis space, right? Can this drop? Yeah, we got major support at 160. We're at 190 now. Can we drop down here to the 42 range? Yeah. One of my third favorite small cap company is going to be this one, SoFi. It's a bank. All right, it's a fintech company that just became a bank. And if you notice, guys, it was up. Actually, it was up 13% earlier today, so it sold off really hard. We're almost at the the lowest price ever was $8.82, but we're now right around $12. All right. This is one of those companies where, if you put money in it and you look at it, 3, 4, 5 years from now, I think it's worth investing in. So that's number 3. Number 4 is going to be Robinhood. I know you guys hate Robinhood. I know you hate it. But people are still on Robinhood. They still have what I think is a decent product. And it's just a $9 billion company. Guys, this company is still small. It's not really that big. Now, I see that it's in a what we call a downtrend. Yes, it's in a downtrend. So I like to see things break up to the upside, go green a little bit before I buy, and the company just IPO'd in July. Give it some time. It should bounce back. I don't know if it ever gets back to 85, but I mean, it's at 11 right now. And then number 5 is probably going to be either Roblox. We talk about this one a lot. It's a metaverse company, right? If you're interested in the metaverse, if you have kids, they already have told, like, if you have smaller kids, oh my god, they love Roblox. It's the same thing with Minecraft. My kids were really, really, really into Minecraft. Well, kids that are younger than my kids are into Roblox, and Roblox is heavy, heavy, heavy in the metaverse. All right. So Roblox is one. I like Twilio. I mean, I like a lot of small cap companies. I like Twilio. Twilio is in your cloud storage, right? So if you love Salesforce and you want to get a little bit more beta, you want to go with something like Twilio. Twilio is what the companies who can't afford Salesforce, they'll go to Twilio to manage, their cloud storage. And then of course you got your Zoom. All right. Now Zoom, what I really like about Zoom, I know Zoom has gone down in price, but psychologically, I want you guys to think about something. In March of 2020, before the pandemic even happened, March of 2020, before the pandemic even happened, Zoom was breaking out in price. It had already been as high as 104. Okay. So when it broke out in price around $90, that was before, that was after it sold. Wait, hold up. This is March. That was before everybody started jumping on the bandwagon and bought it because everybody was sitting at home. So the company was growing before the pandemic. So what I like about that is the price was right around $900 to $100. So I tell everybody that I'm even thinking about buying Zoom if we can get close to that $90 to $100 range. So if you see, as you can see, I have an alert here and alert here, so that when we get close to that price, I might take a shot at it because, believe it or not, Zoom is still leading in its space, right? So if I had to give you guys five or six, that's what I would pick. All right. Someone said that's an awesome comeback story. Yeah, it was a struggle though. It was a struggle, right? Because think of, I'm a black male, right? I'm gonna be honest with y'all. If you didn't know that I'm black, not Dominican. A lot of people think I'm Dominican, not black. I mean, I am black, and I'm a black male that wants to contribute. So when a black male loses his job, I don't know how a lot of you non-black males or females can really understand kind of what we go through because we're already, getting shot out there. The stakes are high for my kind to be in jail. So you feel like you're fitting the narrative of not being able to contribute, not being able to, do your thing, not being able to be a great father, and we're looked down upon. So when you lose a job like that, and then you're an entrepreneur, and that is psychologically, it's really really rough for us to go through. And that doesn't mean that other races and other nationalities don't go through the same thing we're going through. I can only explain to you guys through the mind of a black male. All right, so having someone by your side, having a family, having the support from the people that are close to you that can give you that positive feedback as you are on that journey is adopting this as a lifestyle, right? This is what I want to do, this is how I want to do it. Even if I don't have a job, this is what we should be investing in, and then I'm gonna try to do what I can over here or over there. But if the goal is to have this, then you guys got to start putting yourself in that process, and it starts with setting up that tax deferred account, hiring somebody, even though I know you're like, it's going to cost money. They're going to make a percentage of whatever you make, right? A lot of the time, you don't have to pay any money up front. Hire somebody to help manage those funds and then decide what direction you want to go into. And even if it starts off with $15 or $20 a month, when I first started, guys, I was doing $50 every 2 weeks, right? $50 every 2 weeks. That's all I could afford. $50 every 2 weeks. And then that $50 every 2 weeks turned into 100, turned into 1,000, right? And I'm trying to put as much money as I can into the market as I'm trading the market. And the numbers that I kind of use is I try to take 10% of whatever I make and invest that in the market. So no matter what I make, no matter how many hustles I got out there, I take 10% of it. I mean, you can do it when you're tithing. Why can't you do it for yourself? So, whatever hustles I got that are out there, take 10% of that, reinvest that. You could be ignorant with the other 90%. And y'all know that I'm ignorant, right? We go out, I'm popping bottles, I'm going to the club and throwing money, but 10% of whatever I make is reinvested in myself. And then you can be ignorant with the other 90%. And if you do that consistently, you should be okay. And if you can do more than 10%, 20%, 30%, 50%, by all means do it. I'm just telling you guys my story, okay? And how I go about doing it. And I don't have the perfect system, but my system has allowed me and my family to get to where we're at, and we have, the next goal that we want to get to. All right. Next question. Acorns and M1 Finance can be a good start. So the reason why they mention these particular brokerages is because stocks, you should never invest in a stock by its stock price. You shouldn't go over here and say, Joel, what's the cheapest stock you got over there? That's what I'm going to start off buying. Because if you have $8, don't go and buy this. This has been a terrible company for me, both of these companies. Don't go and buy both of these terrible companies because all you got is $10. If you got $10 and you're starting on your foundation right now, take $10 and go buy Apple, go buy Amazon, go buy Google. And yes, guys, you can buy $10 worth of Apple or Google. If Google or Amazon or Apple doubles in value, your investment is going to double in value. Okay. We got to be smarter. We got to be smarter at the way that we approach the market. Okay. But Acorns and M1 Finance are very good starts. And if you guys want me to, you guys can always book a one-on-one consultation with me, and I can explain to you guys how those particular brokerages work. Someone said, do you say max out the 401k or match what your employer gives you? Well, even with your match, the maximum amount you can put into your account is 19. Even if your employer matches it, the most you can put into your 401k is 19. So you definitely want to match your employer so you can use the least amount of money, right? But the maximum you can put in your retirement account is right around $19,000. But yes, you want to max it out if you can. And for those that are on the fence, guys, if you make $400,000 a year, I got cats complaining. Well, Joel, this is gonna make my lifestyle a little different because I'm gonna have an extra $800 or $1,000 I'm not gonna see. Believe me, you're going to adjust. We're humans. You're gonna adjust to it. You're going to find other ways to continue doing what you're doing. Okay, maybe you can't go to a restaurant and eat at your favorite restaurant once a month or twice a month, or you can't pop bottles one night, right? But you should get into the habit of maxing that account out and maxing out your IRA if you possibly can, and then take those additional funds that you have and reinvest in. Like, it doesn't have to be stocks, guys. It can be real estate. It can be, I know people that invest in exotic cars, and then they go on Turo and rent them out, right? It can be any type of investment, but you have to start with some type of foundation, and you guys got to get into a system where you're systematically paying yourself in a consistent basis, and that's what's going to get you guys to the levels that you need to get to. All right, first stock, MPW. So let's look at MPW. I don't know what they do, but let's say you wanted to analyze this stock, right? I always tell people, hold on, you can go to Yahoo Finance. And let's say I didn't know anything about this company. I would go to Yahoo Finance, and now I see that it's Medical Properties Trust. Now, I've never heard of this company before. So how would Joel analyze this stock? I would pull up Medical Properties. The first thing I notice is that it's 12 billion. Y'all see how I didn't care about this 20? I don't care if this was $2,000 a share. I don't care, because this is where you make your money. It's a $12 billion company that gives out a 5% dividend. This is a gem that somebody just gave us. Now, is it a gem or is it not a gem? Well, I don't want you guys to get sucked up by this dividend, because usually the higher the dividend, the growth potential of that company may stop. So what I want you guys to do is to pull up a 5-year chart. It's good. And a 1-year chart. All right. So in the last year, the stock has dropped from 21 to 20. But check this out. You're getting a 5% dividend. So that means you still would have made money over a year. If you had held this bad boy for 5 years, it grew from $12 to 20. So it grew about $8. So you got about a 75% return. Now I want you guys to think about these numbers. You got a 75% return. So let's just say that was 80%, right? And if you divide 80 by 5, I was averaging about 80 divided by 5. You were averaging about 16% a year, but you were also getting a 5% dividend. So this company is giving you, it looks like on average, about 15 to 20% of appreciation a year. The S&P is giving you what, 12, 13? This is giving you like 20. So I can see why somebody would invest in something like this, okay? But that's how I would break it down first, right? Looking at the day chart, if you were using the what would Joel do method, the what would Joel do method says that as long as this 200-day moving average is angled up, when this stock touches the 200-day moving average, and then it starts to go up in value and go green, that's when Joel would buy it, okay, as an investment. Let's say it hit, and I'm looking for three. So, like, let's say right here it hit the 200 day. Using my method, it hits the 200 days. So that means you guys got to be able to look at charts, or you got to be able to set an alert that says, hey, when this gets to $21, can you let me know? Right. But let's say it starts to go down in value. Joel's not going to buy it just because it hits the 200. I'm going to look for three green that are going up. One, two, three. I'm going to look for something like this. I want it to hit the 200 day, drop, 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 because we don't know how far it can drop. And then as it starts to come back up, and I get about three candles, as long as this is flat or up, Joel will buy it. If Joel had bought this, I would have bought it right around October for about $20, and I'll be up right now. Well, it would have come back down to the price where it is right now. So if I was a betting man, I would wait, because this could go lower. Now, as an investor, you know what I'm saying? You never know how, if you're an investor and you're looking 5 or 10 years down the line, like, does it really matter if you get it at $20.40 versus $20, right? There is some support right here, and we hit that support. So if you're thinking about buying this off of a support area, I mean, the stock showed you that over the last 3, 4, 5 years, it did okay. So that's kind of how I would approach that particular stock. All right, let's look at ABB. All right. So let's go back to Yahoo Finance. So when I pull up ABB, what's the name? ABB Limited, I guess. I don't know what they do. All right. But it's a $65 billion company. You'll never know how big a company is unless you look at its market cap. Its beta is 1.0, so it moves just about as much as the S&P. The last year it was up. The last 5 years it was up. That's the type of stocks I like to buy, and it has a 2.6% dividend. In the last 5 years, though, if you had bought it for $25, this is one of those conservative plays, right? It's a conservative play. If you had bought this, you put about 500, if you put about $500 in it. Let's go to our calculator. What's this called? ABB. Let's say you bought this, just to show you guys what you should be doing, right? Let's say you put $500 in this. And let's say you did it $500 a month. And let's say you did that over a 5-year period. So let's take this to 2017. Right? Ah, they couldn't find the ticker. I did all that work and they couldn't find the ticker. Hold up. It's ABB. Sorry about that. But again, you would have done okay. All right. So it's going up in value, but it didn't really go up that much, 25 to 33. You made about a 25% return over a 5-year period. So you're earning about 5% a year. At the dividend, it's giving you about a 7 or 8% return a year. If you want to stay that conservative, just know that the S&P 500 is actually doing better than this. I always tell people, if you under 50 years old, you probably want to be a little bit more aggressive with your portfolio, meaning that the S&P should be the minimum you should be in. I invest in stocks like this after I have millions. Like if I'm sitting on 10 mil and I'm like, man, I'm gonna put $1 million in this and I'm gonna live off the dividends. That's what I would do with a company like this. But if I'm looking for growth potential, I'll probably find, something else. Pretty good stock though. All right. How about TECL? You guys are giving me stocks I've never heard of. So you got TECL. So this is a This is a company that grows 3x. So it looks like this company is 3 billion in size. Over the last 5 years, this company has grown from $7 all the way to 57, right? So it grew from a company that was less than a billion to 3. And guys, it's still a small cap company, but a lot of people are probably trading this instead of investing in it, right? But if you were invested in it, you would have made a decent amount of money over the last year. You would have made, it went from $38 all the way up to about $88, 100% return. And then now it's down, maybe about 40 or 50%. If I was looking at it here, let's pull up, what is it, TECL, using, if I was looking at it here, as you can see, the 200-day moving average is still angled up. You could have bought this anytime it hit the 200-day and you would have made money, right? Using my method, watch this. The what would Joe do method is you throw a trend line there. If it goes green for 3, bam, you could buy it. It touches it again. You wait for it, 1, 2, 3, maybe I buy it. Remember, this is as an investment. This is not as a trade. Joe's going to trade this totally different. All right. Anytime you get close to that 200-day, it bounces. You get 3 green. You buy it. It's an investment, guys. So if it goes down, it's expected to go down, but you're thinking 1 year, 2 years, 3 years down the line. That's your entry point for an investment. If you were trading something like this, you're going to look at it with a different chart. So anybody that wants me to look at trades or an intraday trade, you need to specify that when you give me the stock to look at. Okay. All right. Someone said, please get into crypto. All right. Well, everything is based off of Bitcoin, right? So you can pull up Bitcoin here. Did you guys know that you can pull up Bitcoin here? I know a bunch of you guys didn't know that. So the next time you guys get a stock tip or a crypto tip, I want you to run the Yahoo Finance, and the very first thing you ask yourself is, how big is this company? Here, this one was a popular one. This was so popular. Did y'all know that Shiba Inu? Did you know that Shiba Inu, even though it's 0.00002, Joel, I got 1,000,000 coins. Did you know that it was worth $14 billion? Do y'all know that $14 billion was actually invested in Shiba Inu? That's what's circulating in it. A lot of you guys didn't know that. Joel, I'm just going to hold this until it gets to $1 and then I'm going to be a millionaire. Please don't say that out loud at any party, because true investor or traders are going to laugh at you. Because in order for this to go to $1 in value, this is going to have to go to like $300 trillion. That ain't happening. Not in some coin that was created as a joke. That's because you guys are rookie investors and you don't know what to look for. Now, you lucked up and made money because the company was probably $1 billion in size and it grew to 14 billion. So whatever investment you had in it grew 10 or 14 times its size. But then it gets to a point where it's too big. And I tell people that all the time. So if you were interested in something like Bitcoin, well, first you got to know how big Bitcoin actually is. Bitcoin, for you guys that think crypto, my uncle told me the crypto is a scam and it's just snake oil. Well, you need to go tell your uncle that there's $1 trillion in Bitcoin and then see what he says. $1 trillion real dollars. All right. If you're wondering why Bitcoin's been going up or down, it's because Russia is probably moving 40 or 50 million dollars through the crypto space. And in order for you to be able to move that type of money, you need the liquidity to be able to do it. Well, Bitcoin got about $1 trillion in it. So moving $40 million in Bitcoin is easy when it's worth $1 trillion. Could Russia move $40 million And Shiba Inu, I mean, 40, well, they could move 40 million because it's worth 14 billion, but they couldn't move maybe a billion because it's almost 1/10, the size of the money that's circulating in it, right? The bigger a company is, the more money can move. Everything is based off of the movement of Bitcoin. Why is everybody so interested in Bitcoin? Because everybody thinks that Bitcoin can go to $10 trillion. All of you advanced traders, the one percenters like me, automatically did a number in our head. We were like, hold up, if this goes to $10 trillion, that's about 10 times the amount that this is. That means that you're telling me, Joel, this can go to a $500,000 coin? I'm like, yeah. Some of you guys can't believe it because 500,000 is a lot of money to you. $500,000 is not a lot to a hedge fund or the people that are moving the market. It's not a lot of money. And it's the institutions that are going to make this be worth $10 trillion one day. And if you get involved with the building of crypto until it gets to 10 trillion, you get to capitalize on creating the space for it because we need your money in order for it to run. A lot of people don't know this. So while you think 40,000 is a lot, I ain't gonna buy this. I'll just go buy something like Shiba. It's 0.00001. You make money on it, but you don't know why you're making money. So next time you get a crypto, next time somebody gives you some crypto, you're gonna say, Joel, what would Joel do in this situation? Well, Joel says, I need to first figure out how big it is. So if somebody says you should buy some Ethereum, you're going to say, well, Ethereum is $350 billion in size. In 5 years, why is the 5-year chart not? In 5 years, Ethereum grew from 294 to 2,904. That means that 5 years ago, people, Ethereum was a $30 billion coin. That's like what Shiba Inu and all of those coins are now. And in 5 years, it grew 10 times its value. So whatever amount of money you had invested in it grew 10 times its value. My mom owned 2 coins back here. I fought her. I made my mom buy 2 coins. She was so mad. I said, Mom, take that $700 you got, invest in it. Because guess what? Your son is close to being a millionaire. And she says, you know what? You're right. You have shown us that your investments over the years have made money. You had a couple of bad calls, but for the most part, 90% of the stuff that you talk about has gone up in value. Since you're my eldest son, I'm going to take a shot. She put $700 in it. She praised me every day because I told her to sell it right there. Everybody knows I got my mama out of Ethereum at $4,500. I literally got her out at the top. She cashed out 9 grand with a $700 investment. Listening to her son. Not She was afraid to get into the market because people like my mom grew up where you learn to get a 9 to 5 and you got to know what type of money that you have coming in so that you know where you're going to be at 10 or 15 years from now. But what they didn't educate my mom and us on is they didn't tell us about inflation. They didn't say, hey, everything that we're buying now is going to cost 10 or 20 times higher. I'm like, hold up. You mean to tell me that one day a burger is going to cost $20? We are already close to that now. I remember when burgers were $99. If anybody told me they was buying a $20 burger, I would have laughed. I would have said, man, that's some old Jetsons future type stuff. Now you go to Cheesecake Factory, you go to any place, any reputable place, you're going to pay $25, $30 for a burger. And y'all are willing to pay for it because you're used to it. The things around you have gone up in value. It slowly crept up in price. And if you're not invested in the market, you're going to get left behind. Okay. Someone asked about Etsy. All right. So if you're into e-commerce, what's e-commerce? Internet commerce, right? Etsy is a growing company, right? You guys can you make your wealth through small and mid cap companies that can grow to large cap and mega cap companies. Etsy is 20 billion in size. That's not that big, people. Some of my favorite e-commerce companies is Etsy, My favorite is my favorite is Amazon. Shopify's 80 billion. Who's the best of them all? Amazon. Guys, Amazon's a $1.5 trillion company. What if Etsy or Shopify grow to the size? Like, they don't have to beat Amazon, but what if they just grow to the size that they are right now? That's where you make a fortune, right? Amazon's 1.5 trillion. Etsy's 20 billion. Small. It's a mid-cap company now that's trying to continue to grow in price. 5 years ago, you could have grabbed this stock for $15. It was a $2 billion stock. I keep trying to show you guys these numbers because that's where you get rich. You can't tell how much money you're going to make looking at this share price. You can't, because a lot of you guys can't fathom this going to 1600. But what they do is they trick you. As this stock starts to grow in value, like let's say it gets to 500, they're going to say, man, ain't nobody buying our stock no more. Let's do a reverse stock split like Google's doing. Let's take our stock back to $100. Fool them, make them think that they're buying this small company so that they can grow this to 500 again. In the meantime, this didn't do anything but grow. That's where you make your money. The beta of this company is telling you that it has growth potential and it's small, right? If you were using an advanced chart, this is how it looks. Now, what I hate is that this is going down, but what I love is that it's forming what we call a upside down head and shoulders pattern. That's the most bullish pattern that you can find in the market when you have a upside down head and shoulders, right? It hits a price, goes down, goes up, drops just a little bit, and then keeps going up. First place we're going to run to is 200. It might sit there for a while. But what I love about it, the squeeze is going off, and we got 3 candles. Remember the what would Joe do method? This is the what would Joe do method. The what would Joe do method says, I'm looking for 3 green candles like this. Now, this got a lot of people. A lot of people got in on this day, but they shouldn't have bought it because this is 1, 2, that's 3, but you need 3 that are going up. So if you have been watching this using the what would Joe do method and all you were doing was counting candles green, you would have said 1, 2, oh, that's down. Joel says stay away, stay away, stay away, stay away. Ooh, a green candle, but Joel says 3, stay away, stay away, stay away. 1, 2, 3, Joel will buy. Whoever picked this stock obviously knows my method, right? And that's why I created such a simple, simplistic method for you guys to follow, because that is the perfect place to get in. Now, it doesn't mean that this can't drop all the way down to 99. But what it did was it ensured that at least maybe 365 days from now, you should be at the price you bought it or higher if you're using my method. My method works like 95% of the time. I think it's even higher than that. I got to go back and look it up. All right. Hey, what's going on, Lynette? It's one of my golfing buddies. Back when we were doing the Mizuno Play Famously tour, someone asked about Salesforce. So Salesforce, Lynette, is a stock that I bought today. I bought 110 shares. Why? Why did Joel buy 110 shares of this company? I'm going to show you why. First of all, let's break down what Salesforce actually is. All right, Salesforce. So let's say you didn't know the ticker symbol, guys, and you were just typing in Salesforce. I'm going to give you the ticker symbol here. Click the ticker symbol. This is the leader in cloud. Like, if you believe in cloud, if you know that you're going to like think about it. Everything that, information is key. They're the leaders in the information space. Now, Apple and Amazon and Google all have their web services. We all know that. But imagine if you're a company that's just as big, well, not just as big, but you're a big mega cap company and you don't have anywhere to store your information. Well, you hire a company like this to do it. Now, Salesforce already has an agreement with Ford and some other big players that are out there, right? So a lot of people are excited because if they're the leaders in their space, and now they're going to start putting, all of the storage of the electric cars and the amount of information that needs to be stored so that the car can be driverless and all of that, and they're using Salesforce for it. You can imagine that's why some people are excited about Ford. But it dropped earlier today, right? But what I want you guys to look at is I don't want you to think about losing. I want you to think about winning. This is an investment. We're not talking about trading. Why would I buy something like this? Well, let's look and see what it did in the last 5 years. In the last 5 years, it went from $99 to $210, right? So it doubled in value. That means you got about a 20% return each year. That's outperforming the S&P 500. That's respectable as far as one of your leaders that are out there. Look, guys, the company is a $200 billion company. I keep telling everybody that this company is probably going to get to $1 billion. And I think it's going to get there. I think it's going to be one of those, me personally, I think it's going to be one of those companies that they talk about just as much as they talk about Nvidia. Remember, I made the same call on Nvidia. These are some of my greatest calls. Nvidia, Tesla, Apple, Facebook, Square, PayPal. These are all stocks that I talked about 5 years ago, and I told you guys what I thought they were going to do 5 years later, and they are actually outperforming what I thought they could do. This is one of those other companies that I put on that list as if I had to pick a couple of companies I think had super growth potential, this is going to be on that list. I bought a lot of it today. All right. And I continue to invest in it. Now, can it go down in price? Of course it can. But when it goes down in price, I have to I have to bite my tongue and try to invest in it. Even in the last year, even though it's down, even though it's down 1 year later. Check this out. 1 year ago, it was 210. So we literally didn't really do nothing. I kind of like that, right? Can it go lower? Yeah. When you pull up an advanced chart, you want to kind of look at support areas for Salesforce. There is a price way down here at 114. I hope we don't go all the way down there. But if we go down to 110, yes, I will lose half the value of my investment. And I'm prepared for that because if we get to this price, this was the March lows. When the March lows came and the market sold off really hard, if you were using my method, the very first time I bought Salesforce, I bought it right around here. I bought it for 153. I sold it a lot earlier though. I bought it for 153 and then sold it at 200, right? So I made like a 33% return and then I was out. I didn't believe it could go higher. And then this bad boy went from 153 all the way to 311. I missed out on 100% return. All right. Now, this is where we at now. Using the same what would Joel do method. What does Joel look for? He looks for a stock to hit its 200-day. Guys, this 200-day is still angled up. I like for it to hit it. This is the average. I like for it to start going green. It did. It came out with earnings and it didn't fall in price, right? We actually ended the day up about 1%. I like that. Can it go lower? Yeah, it can. It can go back to this low, which is 185. So I'm going to set an alert. And if it goes that low, guys, I'm in it for the long run. I'm in it for 1 year to 5 years. I don't mind if this drops in price because it's the leader in its space. It's almost like a no-brainer. It's like, guys, the world has the end for this stock to go away because unless they figure out another way to store information through computers, where else are you going to go? You can go to Twilio. Yeah, you could. You can go to ServiceNow, right? You can go to Apple Web, you can go to Amazon Web Services, you can do all of that. but they are one of the leaders. So, I believe in them just like I believe in Apple and Amazon and Google, right? But it can drop. If you were looking at the month chart, you're going to see it long term how it looks, right? This is what is done from 2005 straight up, right? Can it drop to this 113? It is. That will be a scary move. But if that happens, the whole market's coming down, believe me. And I believe even if we get to 113 from 311, other stocks are going to get destroyed even more. Okay? So, you might want to wait a little bit. Some people like to see one green candle on the month chart. All right, 3 green candles when you're using any other charts, 1 month chart, you got to get at least one green. And I'm using the TTM trend. You're not going to find that on any other platforms. All right. Zeus wants us to look at laser. All right, Luminar. All right, so Luminar, $5 billion company. All right, what has it done in the last 5 years? Well, it just IPO'd in 2019, so it's not going to have that much information. Okay, but it went from $9 to 34 and it's back down to $15. It's a high beta stock. It looks like a company that's trying to get it together. All right, this is what I call one of those speculative companies. Anytime you see a beta higher than 1.1, 1.15, you start getting into that 1.25, 1.3, 2.0, and it's small, stock's going to move. So you got to understand that you can trade these types of stocks or you can invest in them. But when you find stocks that have a beta this high and this small, you have to expect them to drop 30 to 50%. Like that's just what these stocks do. And that's just educating yourself. If you don't know about beta and you don't know about market cap, you guys need to take my stock options and futures. You guys got to take my stock options and futures day trading workshop that I do once a month, where I can teach you guys the fundamentals and the foundations of the market. All right. But in the last year, it's been going down in value. So you want to look at this chart. So laser. So let's see what it's doing as far as using the what would Joe do method. Now, it should have a 200-day moving average. But even with that 200-day moving average, I don't like buying stocks that has a 200-day moving average this angled down. I'm going to stay away because this is telling you that people ever since September all the way until now are willing to pay a lower price than the average. The trend of this stock is going this way. This is not a stock that Joel will pick to invest in. I will trade anything because if I want to make money for the day, you know, I'm just gonna look. Let's say let's say somebody said, "Hey, Luminar is moving today. Joel, could you have made money today?" Well, yeah, I'm gonna pull up Luminar. I'm gonna pull up my 1 minute chart. I'm going to say, are we above the Ichimoku or below the Ichimoku? If we're above it, then I'm going to trade it to the upside. If we're below it, I'm going to trade it to the downside. If you woke up this morning and you wanted to make money on Luminar, it looked like it was a little bullish, but it really wasn't really doing anything. This is one of those stocks where trading wise, it doesn't look good. Investing wise, it really doesn't look good. If I was trading it, I would short it, but it's not giving me those patterns that I like to find that makes it easy to either trade it or invest it. If I was trading it, it would be to the downside because the trend is your friend until it ends. Well, the trend is down. So what this bad boy is doing is all it's doing is coming close to this 200-day and then selling, 200 days selling, 200 days selling. So can this rise? Yeah, but it's probably only going to rise to maybe here. So there's no upside, to 16? Then it's probably going to reverse and go lower. So, as a short, yeah. As an investment, nah, not until I see this 200-day angle back up in price. So, be careful when you're looking at that one. Yeah. Somebody asked, is Snapchat still a long-term buy? Well, let's analyze it, right? So if I was looking at Snapchat, $60 billion in size. Well, what's similar to Snapchat? Twitter. So you want to see if its competitors are around the same size. Twitter's 27, Snap is 60. So it's double the size of Twitter. I don't know if you guys know that or not, but look how much smaller it is than Facebook. Facebook is $566 billion in size. 566 billion. Snapchat is small, 60. You got five, like Facebook is 10 times bigger than Snap. Okay, so that at least lets you know in size what you're dealing with. But let's see what's happened in the last 5 years. Well, in the last 5 years, you could have bought Snapchat for $14. That bad boy rose all the way to 70. You made like 5 times your money, a 500% return. And then it dropped to 37. Well, anything that's going to go up 500%, guys, it's going to drop 50%. It's just going to do it. Half of 76 is what, 38? That's where people like to buy this. Anytime you can buy a stock 50% off, you're going to see a lot of people come in there and buy it, especially when it's a company that's been doing well. Now, in the last year, it's dropped in price. But what I'm noticing that a lot of these companies are doing is the market is trying to price stocks back to what its price was before COVID happened. So let's go back to COVID, right? Let's go back to March 20th. March 20th. Where is March? This is March. March 20th, March 2020, not March the 20th. Back in March, Facebook was a $19 stock. And then it started to go up in value. It dropped from 19 to 8, got back to 19, but before COVID happened, it was already a $20 stock. So, knowing that value, that is a very nice support level right there at 19. I'm going to erase this other value, this one and this one. Actually, let me pull up. Oh, we got Snapchat on it. So 19 is an area that you should be looking at, right? 19. Now, we got close to it, guys. We got down to $23. And then everyone, it sold off in price big time on this day. I don't know what happened. Maybe it was earnings. Oh, yeah, it was earnings. So it dropped in price. Can't make that bigger for some reason. Hold on, let me try it here. All right. So it dropped in price on February the 2nd. It dropped from $34 all the way down to almost $23 in price. Shoot, that's when I came in and bought a whole bunch of it. I was like, man, this is crazy. Then it shot up in price. It gapped down in price before earnings. Earnings came out and Snap said that it had one of the best quarters that it ever had. It said it had one of the best quarters that it's ever had. That's the type of thing that you want to hear. Your kids, anyone that's on Snapchat, they ain't giving up Snapchat, right? It can only grow. And Snapchat hasn't even started talking about the metaverse yet. Once they start talking about the metaverse and getting involved in that, you should see the stock probably go up even more in price. So if you're trying to figure out where we are now, we're right here at this $37 level. So I can understand if you're scared of buying Snapchat. It does have a downward sloping 200-day. But when we bought it as a trade until it got up to this line. And all it's been doing is trying to get through this line, and it can't get through it. It's at 37 now. It can't get through it. But if it does break above this line, the first place Snapchat's going to run to is 48 and then 58. And if we get to 58 from 37, guys, you're talking about making like a 50 or 60% return. And that's doable for a stock that's only $60 billion in size. Remember, Snapchat used to be $100 billion company. It's trying to get back to what it used to be. It's at 37, but the stock during its all-time highs was 83. This stock can get to 70. This stock can get to $60, not even get back to $83. And you can still make about about a 70 or 80% return, even if it just hits the bottom of this 200-day moving average. That's what I'm looking for. I'm investing now, expecting it to at least get half of this move. And if it decides to run, it's going to run. And remember, you got a 90% chance that it's going to get back to its all-time highs one day. It might happen for 5 years, right? Even if you earn 20% a year and made 100% return over a 5-year period, even if it took 5 years for it to get back to 74, well, that's doable, right? Because it dropped in price from 2021. So even if you had a long period, I think Snapchat can still give you 10, 15, 20% a year. You might get lucky and get a lot of that return back in the next year or two. Okay. All right. Great stock. All right. Let's look at Docs. What the heck is Docs? Docs. Doximity. Doximity is a $16 billion company. 5 years. It just IPO'd, in 2021. So there's not that much information. It went up in price 49 to 102, and then now it's down at 60. Doesn't have a beta because it hasn't been out for that long. All right. So if you were interested in something like this and you pulled it up on a chart like this is what you say. Using the what would Joel do method, you would already be in profit. Why? Because Joel wants to see this drop in price. That's number one. Number one, you want to see it drop in price, right? Number two, it has to go green on the John Carter. Well, actually, let me take that back. Number two, it has to break this trend line, meaning if it's underneath this line, it has to go through it. You can't get to, no matter if you're on the other side of this line, you can't get to 40, 50, 55, 60, or 70 without going through this line. Like you can't cheat. You can't go behind it. You can't go underneath it. You got to go through it. So number two, you got to go through the line. And then number three, it has to go green on the John Carter. 1, 2, 3. 1, 2, 3. Joel would have bought it somewhere in the 46 range. I would already be up as an investment. I would already be up 34% using the what would Joel do method. Okay. Use my method. It works. All right. So does it have growth potential? Yeah, because it's only a $16 billion stock that can grow. Does that mean you should go get in it right now? Does that mean that this can't drop in price? Anything can happen in life. But you guys got to know how you are approaching it. How much money are you putting into it? How much do you think it can actually grow? If you think that it can only grow to 80 billion, then you can make 5 times whatever amount of money that you invest in it. Right. And then you kind of look and see what its growth potential is by what it's done in the past. All right. Someone said it's more than that now. I forgot what you were referring to as far as your stock, but you said it's more than that now, Joel. Maybe I made a mistake. If so, let me know and then I'll pull that stock back up. All right, someone asked, how low are you expecting the SPY? All right, so the SPY is the S&P 500. So how far am I expecting the SPY to drop? Well, let's look at the history of the SPY. This is the S&P 500. So let's look at the S&P over the years. Well, let's look at the percentages. I think I have one here. Uh, all right, so let's look at this. All right, so the pandemic lows. When the pandemic lows happened, guys, the market dropped 35%, and it did it in 2 months, right? The March lows, we dropped in price. If you were using the what would Joe do method, the what would Joe do method says don't panic. We hit the 200-day. What are money managers going to do? They're going to wait for it to break this trend. 1, 2, 3. You would have bought the S&P there for 255, and guess where we are right now? 437. If you would have done it again, don't panic. 1, 2, 3. You get in 316. You would have done it again. It would have been close to where we are now. Now, this is why a lot of people are struggling. Now, here's the thing. We never broke above this trend line. Nobody should have been buying the S&P from January till now. Because if you had just simply drawn this line here, yes, we got 3 greens here, and a lot of people took a shot right here, and they took a shot because this went green. But if you had just drawn this line you could have drawn way back here. You could have started this line before it started to drop. If you had just stayed patient, we have not broken above this. Nobody should be thinking investing yet. I'm doing it because I'm investing. I've already started buying stocks, so I'm buying systematically. But if I was using my method and I haven't bought anything yet, Joel will be sitting on the sidelines chilling, waiting for us to break this trend, go green for 3 days, 3 greens, and then I'll start taking a shot to the upside. Now, everyone kept asking me, how far do I think this can drop? Well, if we were really, really scared way back here, and we thought that we were all gonna die, and sorry for those that had family members that did pass, the market only dropped 35%. Why did that happen? Because the market was already doing well. See, when a market is healthy and it gets, let's say you're a human. If you're a human and you were in the best shape that you've ever been in, and you get shot, you're going to be able to recover, maybe a month, 2 months, 3 months if you didn't hit any vital organs. But let's say I was really, really sick. I had pneumonia. I had COVID, and I was walking around, and then somebody shot me in the same place. It's going to be hard for me to recover if I was already sick and then I got shot. Well, the same thing is happening right now. Guys, the market is experiencing some of its best numbers that we've seen to date. That's why investors like me are not really worried. We're like, hold up. COVID, like literally the president just came out and said there's no longer a mask mandate. We all know that anytime war happens, the market goes up in value. If you go back and you look at the history of it, the wars do not make the market go down, it makes the market go up. Economically, you can go you can go investigate and figure out why that is. Number 3, you got interest rates that are about to go up. Why would the feds raise the interest rates if they didn't feel like the economy was strong enough to withstand it? And then 4, they're about to print $5 trillion and put it into infrastructure, which is going to create so many jobs and so much money in our economy. That's why they're trying to get the inflation under the wraps now, because they're like, hold up, we're not about to flood the market with $5 trillion when the inflation is already higher than it's been in the last 20 years. That means the market is actually doing extremely well. So this mindset of thinking that the market's about to crash like it did back during the real estate market crash, you're probably talking to people that's not invested in the market. Those individuals that are scared, you're talking to the wrong people. You're not talking to money managers. You're not talking to millionaires that make money during this time. And every single solitary person that's made money during periods like this is going to tell you this feels nothing like 2008, 2009. This feels nothing like the pandemic. This feels nothing like even the dot-com crash. Even though the dot-com crash, the market came down pretty steep. I think 35 or 50%. So what do I think's happening right now? Well, the market dropped. If you do the numbers, the market only dropped 12%. All right. Let me go test it again. The market dropped. These are real numbers. You can see it with your own eyes. The market dropped 14%. Y'all see that? Y'all see this? I went from the highs to the lows. Look at this third number here. That number is minus 14. So can we drop another 20% from there? Yeah. If you want the same type of drop that the pandemic did. So, we're still not out of the woods. It can hit this 200-day and turn around, but this is telling you that the market is healthy. A rising 200-day moving average is telling you that the market is healthy. If this was angled down, then I would say, like, okay, the market is not healthy right now. We haven't had a downward sloping 200-day moving average since that doesn't count. We haven't had a downward sloping 200 days since here. That was 2016. All right. And that was during Brexit. Okay. 2015, and it lasted for about a year. Y'all see that? It went from about 2015, August 2015, to about June 2016. So, if this is the beginning, I would say maybe one full year. We might struggle for the next 10 months, 12 months. All right. But even if you had bought, think about it, even if you had bought here and you waited 12 or 13 months, you were rewarded really, really quickly. Okay. So again, if you're struggling, yeah, we're not out of the woods yet. I would wait until I saw this go green at least 3. We haven't seen that yet, right? It's still red, 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 red. It went green right here, and it caught a lot of people off guard, which I still believe if you wait a year later, you're still going to be fine. But for those that haven't got in yet and you're still sitting on the sideline, you could wait a little bit until we break higher, but we're probably going to be higher when you get in. And if you can understand that particular situation, then you can go about you can approach the market a different way. All right. Uh, let's look at APTV. All right. Same thing. 200-day starting to angle down. We hit a high of 180. All right. That's the all-time high right there. Okay. It's dropped. It's dropped 36% in price. Now, if I was looking at a month chart, it looks like it can drop. It can drop to here. That's when it made a whoosh. I would say that would be the next support area. So it's in a downtrend, but if it can get to this price here, it might be a buying opportunity if I were you. And why? Because that was a resistance area. It resisted here, finally broke above it. If it comes back to this point, set yourself an alert. Go here, set yourself an alert like this. See how I'm doing my homework? Set yourself an alert. If you want to use the Fibonacci to see how far we've dropped, you know, 50% is going to be the areas that I like. Well, that 50% area is right around this blue mark. If I was a betting man, that's probably where it wants to go. Okay. If I was buying that particular stock. All right. Someone said SPG, which was Simon Property Group, the one I was telling you guys about earlier, which is a real estate play. This is the month chart. So there's some overhead resistance. Okay. It's underneath that overhead resistance. Okay. So what I do like is that it is at is at a support area. You have some support right here. All right. So you do have some support. If I was looking at a 200-day moving average, the average is angled up. That's good. When it's angled up like that, guys, that's a good thing. Once it crossed this 200-day, started to go up a little bit, you could have bought it 1, 2, 3 green or 1, 2, 3 green. Didn't matter if you bought it there or bought it there, you would have made money because this is telling you that this is fundamentally good. I don't have to go research too many companies because if the hedge funds and institutions are buying it, this is telling me that it's healthy. Anytime people are willing to buy a higher price than the average, it's healthy. There's healthy buying, right? You could have put a nice little trend line here and just waited, waited for it to hit some of these trend lines, maybe buy it, you know. Joel's going to wait until it hits the 200-day. Well, it hit the 200-day here. Joel is going to hold off because it hasn't broken back above it and I haven't gotten 3 greens, okay? Someone said Ford as a trade I'm going to assume that it's for a swing trade. So if I was swing trading Ford, we haven't looked at this chart yet. It's the 1 hour chart. The 1 hour chart tells me 7 to 14-day trends. When Ford broke, let me erase all of this. Let me get a clean chart. All right, when Ford hit a high and it broke beneath this yellow line here. Let me erase that. When Ford broke below this Ichimoku, Joe knew back on January the 19th to stay away from Ford. Most of you guys didn't. All I did was take out this one little indicator that I talk about a lot. Nobody really uses it because it has a funny name. It's got a funny name, Joel. I don't want to make money. It's got a funny name. Okay. Once it got underneath here, Joel said stay away. Don't buy it again until it breaks above this line. So if you had just using the what would Joel do method, Ford should have never been on your radar to the upside as a trade. Should have never been on any of y'all's radar until today. Until today. It broke above the Ichimoku, started to go blue on the squeeze. You're in a little bit late. So if I was trading this and it broke above it, Joel says that when it breaks above this yellow line, you got about 7 to 10 days where it might be able to run. You don't believe me? Let's go back and look at Ford. When Ford broke below here, it was November the 29th. It broke back above it on December the 9th. That was like what, 10, 11, 12 days, right? Stocks usually sell off and then they go up, then they sell off and then they go up. When they go up, they're bullish for like 7 to 10 days, then they're not bear. Then they're people sell it for 7 to 10 days, and they're up for 7 to 10 days, and they're down for 7 to 10 days. If you don't know that about the market, you haven't learned from a true one percenter. Stocks do not go up every day for a year. They go up 7 to 10 days, down 7 to 10 days, up 7 to 10 days, down 7 to 10 days. All right. When it broke above it here, it was bullish from December the 27th all the way until January the 19th. It was bullish for like 3 weeks. So if it was bullish for 3 weeks, how long you think it was going to be down? Probably for about 3 weeks. Where traders go wrong is you guys trade off of what you see that day, that information. Trading and investing is about patterns. Humans operate off patterns. If you want to learn how to trade and invest, you got to look at the history if you want to know what it can do in the future, or give you an idea of what it can do. How much does it move? When it's bullish, how long does it go up? Okay? Because it's the same people that's moving this market up that's moving this market down. Okay? Underneath here, it was bearish from January the 19th, probably for about 2 to 3 weeks. It's now breaking above it again. Maybe we go bullish for 7 to 10 days. Sometimes it's a fake and then we break right below here again. So be careful. But if you take a shot at it, you might be all right. Now, I like for it to be a green cloud. I don't really like the red clouds. I like green clouds. This green cloud, Joe probably would have got in this bad boy late, way over here. I like green clouds. I don't like red clouds because red clouds can be a fake. Let me see it go from. See, red clouds can be a fake. It broke above it and then it went up for a day or two and then it broke below it. But then I got a green cloud. Ooh, I like green clouds. I hate red clouds. Okay. Why did they end up taking this again? Because it was a green cloud. Green, green, green is good. Red is bad. Green is good. Red is bad. All right. So that's forward for a trade. All right. Let's look at JC. I'm going to speed through these since you guys know the methods now. And I reward those that put their stocks early. All right, Johnson Controls as a trade, trading Joel's method. Y'all automatically know Joel ain't buying this. We underneath the Ichimoku, next stock. But as an investment, totally different. Is this 200-day angled up? Yes. Have we started to go back up? Nah. So why are y'all buying this now? You don't know how low this can go. How low can you go? Oh, it can go all the way to the flow. It can go all the way down here. Wait. If you're not in it already, wait. Wait. All I see is red. Red, red, red. Wait. Because the first person that bought it here, now it's at 64. You could have got it for a cheaper price. Wait. Yes, is it one of those stocks that you can buy over and over again because you believe in it like a Salesforce? Yeah, go ahead and do it. But if not, you okay. All right, ABB. Oh, they make electrical equipment. We went over ABB earlier. All right. All right. Charles said swing in Devon Energy. It's an independent energy company, primarily engages in the exploration, development, and production of oil, natural gas, and liquids in the US. Guys, gas is popular, right? Let's look at gas. Let's look at gas futures, right? If you are into the futures market, and every intraday trader should have different weapons that they use to trade the market. If you're scalping the market, getting in and out the same day, generating income, you buy and sell, and then you go to sleep at night, and you're only doing options on stock, you're limiting yourself. You need to learn the futures market. You need to learn, how to look at stock, and you need to learn how to do options. If you're just using stock and that's it, you're limiting yourself. Learn the stock market, learn the options market, learn the futures market. Those are the three things that all really, really good day traders are using as tools to trade the market. You're not going to be able to really talk to the best traders out there unless you understand futures, stocks, and options. All right. So, crude oil. Guys, crude oil hit 113 today. That's absolutely bananas. All right. That's absolutely bananas. I don't know how much it is at the pump because we own Teslas. All right. I know I'm being petty LaBelle right now. But let's look and see how oil has done. I told everybody last week that oil was going to 113. It was a done deal. Why I didn't trade options in the oil market, I don't know. Punch me in the face. But this was a no-brainer trade. Can it stop right here? This might be the end of the oil move. I don't think so, though. I think we hitting 150. I think we hitting 150, guys. We might even push to 200. All right. So if you're trading right now, you should be trading the heck out of oil. If you were trading the heck out of oil, let's say you was trading the largest company out there, XOM. Let's say you were day trading. I haven't shown any day trades today. Let's trade XOM using the what would Joel do method. Let's say you woke up this morning and saw that oil was up and it was 9:45 and you were like, I want to make some money today. How would Joel trade? I know I'm getting in the market 15 minutes late. I didn't even know I was going to trade oil today. Could I have made some money? How would Joel have traded this? Everybody knows using my method, I fundamentally look at the market because intraday trading, guys, for a long time, I thought was technical. Intraday trading ain't technical. Intraday trading is fundamental. And once I learned that, that's when the light bulb went off. I was like, oh man, I'm trading all of these indicators trying to get me in and out. It's fundamental. It's always been that way. You can use an advanced chart, but it's fundamental. So let's say I wanted to trade XOM, and let's say I had $25,000 in stock, and let's say I had $1,000 in options, and I wanted to know how much money I could have made today, and futures. How would I have made money? Well, if I had $25,000 and I was trading XOM, I simply would have pulled up the chart that I use, and I would have said, are we above this yellow line or below it? If we above it, I'm going to trade to the upside. If we below it, I can short to the downside. But it can't move its average move of the day. So I got to know how much XOM moves in a particular day. So if I go to XOM, I'm going to see right here that it moves $1.20. Bam, I know how much money I can make. So if I look up and oil moved $1, Joel ain't buying it. But if I look up and it's only up 50 cents, I can make another 50 cents. Trading and investing is easy when you guys know what to look for. You could have woke up late, got in right around the time Joel says get in, which is 9:45. You would have known that it moves $1.20. You would have come here, you would have said, all right, Joel says that this should move about $1.20. That means if we hit 80, it should move about $1.20. I mean 81.20. Where did I get that number from? I got it from adding the lows to this move. Oh, I'm sorry, that's the beta. I'm sorry, the ATR is 244. Sorry, let's take that back. The ATR is 1.2. I mean, the beta is 1.2. The ATR is $2.40. That means oil moves XOM moves $2.50 every day. If I see that there was a low here at 80, I can assume that this can go to 82.44. So I'm going to change this to 82.44. So if you look up, guys, y'all make trading so dang hard. If you know that it can move to 82.44 and you wake up and it's 9:45 and we at 81.30 and we ain't at 82.44 yet, that means you can probably make money to 82.44 if you trade the way a 1%er trades. If you learn information from some day trader that ain't made money in 365 days, they probably gonna tell you to pull out indicators 7 or 8, and when this lines up with this one and that one line up with that one, and then you go to this chart and then you go to that chart, then you look at it on this chart, and then it's got to be like, that's probably why you can't make money. But if you trade it fundamentally and you say, duh, oil moves $2.50, if it ain't moved $2.50 yet, then maybe I can make some money. And if it's above here, that means people are buying it. So if they're buying it and it has an average move of 250, it's probably going close to that 244. It didn't quite get there, but it moved at 945. You had a lot of money that you could have made. Then you could have gone into the options market to see if people are actually buying it. Now, here's why you probably would have said, you know what, instead of trying to push it to 82.44, maybe I should see what the billionaires and millionaires are doing, because it looks like they're only buying it to the 81 strike. So then when you go back and you look at the charts, and even though you're trying to get in at 81, you're like, dang, the 81 strike is what everybody's buying. I know it moves to 82.44, so am I gambling? Yeah. But even if you had taken that gamble because we were above here and it was squeezing like heck, and you know that everybody's buying oil because of what's going on in Russia, you could have taken a shot at 81. Let's say you had $25,000 and you had bought this for $81. And let's say it went to $82. This is what day traders do. You would have made $308 in about 942 in about 20 minutes. Most of you guys don't make $300 an hour. You could have done that. This is how you use a business to make money daily on something that you're trading. But let's say you don't have $25,000. You're like, Joel, I ain't got 25. Well, you knew that everybody was buying this 81 strike. So you would have said, Joel got in at 945 using 25,000. I'm going to get in using less than that. What's today? Wednesday. Joel used $25,000. With Joel, I ain't got $25. I got $100. All right. Well, at 945, you would have bought some for 122. Same trade, same strategy, same everything. You would have got in trading the same company, XOM. If you had bought this and you had $1,000, your $1,200 went to about $1,800 in 20 minutes. You actually would have made more money in the options market. You would have made $600. You would have made double the amount that a person that was using stock with $25,000 trading the same exact thing. You would have made more money in the options market with a higher return on your investment, which is why I tell people that options is the ultimate trading tool. You don't have to have $25,000. You could have had $1,000, right? And you would have made a 50% return in 20 minutes, trading the same exact way that I'm trading, using the same charts, fundamentally figuring out what's happening. All right. So let's go back to Devon Energy. All right. So Devon Energy. And I got 15 more minutes and I got to get out of here. As you can see, the 200-day moving average is angled all the way up. So, I mean, yes. Geez Louise. What's the next area that we can go to? It looks like it can go to 69 or 70. And here's another area. Where am I getting these areas from? The past? It's already broken above this resistance. That was a price that it was struggling with, 49, 49. Then it got to 49 and went to 58. People are willing to pay a high price, probably 70, maybe even 80, right? So it's breaking out. We call this breaking out in price. If you look at the 200-day, it's so far above its 200-day, you can't even wait for it to break back down. But let's say you should have caught this way back here when the 200-day started to angle up. You would have used the what would Joe do method. You would have waited for it to go down again, back up. It went green on the John Carter, and you would have known to buy it right there. You could have bought it somewhere in the $18 range, and we sitting at 58. You could have missed it. This could have gone down in price. You could have missed that move. It went down, got close to the 200-day, started to go green. You decide to buy it here. Now, guys, you're not going to find these technical indicators on the platforms that you're using. You're only going to be able to find it in two places, the Thinkorswim charts or TradeView. TradeView is free. So if you want to go the free route, go that route. I tell people that Thinkorswim is free. All you got to do is deposit $50 into TD Ameritrade. You get access to the best tools that are out there. Why not use these tools even though you're trading on a different platform? All right. You could have waited until, you could have waited until it dropped here. Went green, made money. You could have waited till it dropped here. Went green, made money. All right. So many chances to make money. Why would you keep doing that? Because the 200-day is angled up. All right. Someone says, is it possible you can evaluate CVX? So since we're talking about oil, let's talk about Chevron. Yeah, look at Chevron, guys. Chevron hit an all-time high today, like the highest price it's ever been in the history of the company. Now, I ain't buying it when it's way up here. Let it come back some. So even like guys, stocks are gonna pull back some, right? They're gonna stair step up and stair step down. Let it come in some. I don't even really need to pull up anything because look at what it's done. I mean, everybody knows that oil is on fire. Its old all-time high was here. It's way above there. So we're probably going to come back and test 135. I don't even know how high this can go because it doesn't even know how high it can go. But if I was watching something, maybe watch XOM. And if XOM hits its all-time highs, maybe that's when Chevron will stop. All right, let's look at I think this is Palo. Yeah, it is Palo Alto. All right, so if you're into cybersecurity companies, guys, the company is at its all-time high. Why? Because Russia, all of these different companies that are going into war, they're going into war through the computers, right? So big companies, big mega cap companies, they all need companies like this to do cybersecurity for them. So Palo Alto is one of my favorites. Really not much to see. It's at its all-time highs. But if you were using my method and buying it when it hit the 200-day, go green, you would have made money. Hit the 200-day, went green, you would have made money. Here was a bad move, but that was the 2020 lows. And then ever since 2020, anytime this bad boy hit the 200-day moving average, it was a buying opportunity. Y'all see that? Every time, even when it got close. And look, we got close again right here. Did anyone buy? Nope. Did Joel buy? Nope. But I was buying something like this, which is CrowdStrike. CrowdStrike is my favorite cybersecurity company. Okay. So if you see Palo Alto sitting up there, I've been telling everybody to buy this one because Palo Alto is already at its all-time highs. So look at what's going on right here. Why do I like it? It was down 50%. That means you could make a double. That means it'll make 100% return if it ever goes back to its all-time highs. B, it hit the 200-day, it broke it, and it went green. Now, it did reverse here, but what I love is that it double bottomed. And now it's starting to rise. The first place I think it can go to is 232. Guys, that's a 15% return if it goes from here to here. 16% actually. If it ever goes back to its all-time highs, you're going to make a 49% return. To know the difference in size, you got Palo Alto that's sitting at 57 billion in size, and you got CrowdStrike that's sitting at 46. So Palo Alto is bigger, CrowdStrike is a little bit smaller. They're both doing the same thing. I always tell people to buy both of them. Okay. All right, let's look at Fiverr real quick. Fiverr, I use Fiverr. Y'all see all of my slides that I do for webinar week? That was a Fiverr that did that. I could pay a Fiverr like $5 a slide, $100 for my whole slide presentation. All right, Fiverr is $3 billion in size. It's a small cap company that can grow. Now it did well during the pandemic. So what everybody is doing is they're going back to the price that stocks were before the pandemic happened. So Fiverr could drop to $25, people. It could. It could. Be careful. But let's see how it looks on the major charts. All right, Fiverr. Ooh, I don't like that. 200-day is angled down. Now, as a trader, you could trade it to the 200-day. But I don't like this. This means something is fundamentally going wrong with the company because it's had a downward sloping 200-day since September of last year. So September, October, November, December, January, February, March. It's been 6 months and this stock can't go back up. Be careful. It can fall even more. We already looked at the spiders. Someone asked, can you repeat how I can get into your trading group? I bought several courses from you. You got to just show a receipt. So if you've ever bought a class from me, you just show the receipt in Messenger. So you join the room, show your receipt in Messenger. Hey, Joel, here's my receipt. And then my niece will let you into the Ninja trading room. All right. You guys will still be able to get into the insider trading room for free. Lynette said, thank you, Joel. My pleasure. Someone said you can invest 19,000 in a 401k, and he said it's more than that now. All right, so if it's gone up in price, guys, I don't know the tax code. So if it's more than 19, it's not that much more. It's not going to be like 38,000. Maybe it's 20, but 19,000 is right around the amount you can max out in your 401k. So I want you guys to take advantage of it, please. Someone said, can I go over the ATR? So the ATR is the average true range of a stock. So if I wanted to day trade today, ATR is strictly done for day trading. So let's say I wanted to trade forward today. Well, you guys are trading forward. You don't even know how much forward moves. So if I bought forward today, how do I know it can't go to $30? Some of you guys are buying today thinking it's going to go to $30. Well, if you're intraday trading forward, you know that forward moves about $1. So if you were buying forward today and you were intraday trading means get in and out the same day. Once we hit a low and we start going up in price, I know that it's probably going to go up only about $1. And I get that information before I trade it. So if I was trading forward this morning and I see that we hit 1720, anybody getting in at 1820 don't know how to trade, period. 1720 plus 1 is 1820. Where do y'all think Ford went to today? 1820. Y'all make trading hard. I don't. It's easy when you know what to look for. Its average move every single day is $1. So anybody that bought this expecting it to go to 20, you're being unrealistic. I don't care what type of news came out. Can it go $3? Yeah, but its average move is $1. That means, yeah, it can go 80 cents. And then the next day it can go $1.20. But if you add 80 cents and $1.20 and then you divide that by two, it's going to give you $1. And that's what the average true range is. It's an average price of that stock if you're using my technical indicators over the last 14 days with the volatility included. So even under extreme volatility, a year from now, I can't say Ford moves $1 because let's say the volatility of the market is higher, or let's say Ford has grown in price. That ATR is going to change month to month, week to week, day to day. So you got to check the ATR each day before you trade it. Then it gives you an idea. It doesn't tell you that that's what it's going to do. Average range means either move up $1 or let's say it's selling off. Sell off about $1 before it hit its lows before it starts to go up in price again. So that's the ATR. Someone said that the screen is so small I can't see what is the timeline that you're charting. Most of the charts that I'm looking at is going to be a day chart. So everybody knows I only use 3 charts. I only use 3 charts. If I'm investing, I'm looking at a day chart. You rarely see me using the hour chart. The hour chart is what I use if I want to buy and I want to get in and out and I want to make money in less than 15, I would say less than 30 days, but usually like 15 days. And then if I'm intraday trading like now, it's a 1-minute chart. So most of the time you're going to see this chart. If you see this blue line, it's a day chart. This is for strictly investing. This is what everybody should be doing anyway. Most of us aren't trading anyway. People that are trading, though, you guys shouldn't be using a day chart trading unless your trades are 4, 5, 6 months out. If you're trying to make money in the next 14 days and you using a day chart, that's probably why you losing money. You using the wrong charts. I can't see what's going to happen in 3 days on a day chart because you only get 3 candles. And I think that's the thing that a lot of people don't really get yet. Okay. So just make sure that you guys are using the right charts. If you take my webinar week, I kind of teach you guys how to set yourselves up so that you'll know my charting system. And I only use 3 charts. That's why I trade better than anybody y'all know, because I simplify everything I do. And that's why I out trade the traders. I out invest the investors, because what most people do is they use too much information to buy something that's either going to go up or down. Like, why do I need 37 indicators and 37 different charts for something that's going to move up or down? Like, that doesn't even make any sense. You should be using 1 or 2 indicators at the most, and you should be using 1 chart for whatever strategy you have, and then trade around that or invest around that. And believe me, it's going to make you not only a better trader, but it's going to put you in positions a lot faster and a lot more clear, because you're going to have a clear understanding of what you want to do with that particular trade or investment. I showed you guys SoFi earlier because it's a bank. It's a fintech company that just recently got its banking licenses. So it's a small cap company that can do well. The 200-day is angled down. I don't really like that. But it has some positive news today that it's growing in value and that its memberships are going up in value. And those are the types of things investors like to get when they're buying. All right, it's almost time for me to get out of here. Someone said that Chevron bought a company called REG on February also. So Chevron bought this company probably through stock, Regency Centers. And as you can see, Regency Centers is doing okay. It was in a downtrend, started an uptrend right around when oil started to run. So, you might want to take a look at that. Pamela said, thank you so much. I get so much out of your lives. No problem. I try to show you guys how I'm approaching the market. Any and everything that I'm doing is a strategy that I'm using. And I keep it very, very simple so that my kids can understand it. All right. And that's not to make you feel bad or like, oh, are you smarter than a 5th grader? It's just because I've learned over the years that the more complicated you get and the more information you try to find to invest and trade, more than likely It's just too much information and it's going to give you paralysis of analysis. And I don't want you to get paralysis of analysis. I want you to understand what you're doing and why you're doing it. And if the stock is dropping in value, if it's an investment, you should be buying more instead of being afraid of it, and stop worrying about the the profits and losses when you're investing. Profits and losses are very important when you're intraday trading and when you're day trading or swing trading. When it comes to investing, if it's a solid company that you already researched, when it goes down in value, you should be licking your chops and buying more of that particular stock. All right, so I'm coming to you guys from Decatur, where it's greater. Again, your friends and family, don't keep all these secrets to yourself. Don't keep all of these gems to yourself. If you know somebody that's out there that needs to get educated, have them sign up for this webinar. It's $95, guys. It's 10 hours of me live. It's not me playing a video for 3 or 4 hours. It's me talking just like this for 10 hours for 3 days. You're going to have access to that for 30 days. If you guys need your charts to look like mine, you can uh download my thinkorswim chart setup video. All right, that's going to let your charts look like mine. Like, so if you download the thinkorswim chart setup video from TD Ameritrade, you first got to sign up with TD Ameritrade, open up your account, then you're going to have access to the thinkorswim charts. But it's going to be overwhelming when you open it, so I created a video just for you so that you can make your charts look like mine. Do a one-on-one consultation with me, a one-on-one consultation with me. Anybody that wants access to all of my videos, make sure that you do my ultimate membership service through the app. You're going to get access to all the videos and you're going to get access to the webinar. So if you know that if you know that you need all of this information, don't sign up for the webinar and then come and do the ultimate. Just do the ultimate and then you're going to get access to the webinar. All right. So I'm coming to you guys from Decatur, where it's greater. Good luck in the future, and I'm out of here. Peace.